see here. Hey everybody, if I'm looking live right now, I can't see if I'm live yet. YouTube is kind of glitched out on me. It's still saying it's waiting for the stream, and I think there we go. Okay. Hey everybody, happy Monday here. It's definitely been a wild one out for you guys. Hey Skull Guy, I'll reset the Robinhood numbers after the stream is over for you, and I'll put the music back on as well. Loki says hello as well. He's been pretty much trapped in the house because it's been pouring down rain out here in Washington. So we have a lot to talk about today. First, I wanted to talk to you guys about the banks here, and then kind of what happened over this weekend, the bailout that's kind of not a bailout but really is a bailout, and what this kind of means as far as CPI data coming out tomorrow, PPI data coming out Wednesday, and then of course what's going to be talked about, I would say, over the next few weeks as we head into the 22nd, when we might have a rate hike, we might have a rate cut, or we might have a no hikes. Everything's kind of been tossed into the air at this point because everybody's frantically trying to figure out what's going on. So I thought I would just, like, without showing you guys any articles or just kind of going through boring readings, just kind of give you guys my opinion on what's been going on, because today you saw a lot of wild stuff. You saw the market pretty much go sideways. You saw Bitcoin soar to the heavens. And then, on top of this, we have a potentially disastrous CPI number coming out tomorrow, or potentially a CPI number that can boost Bitcoin all the way to like $28,000 or so, okay? So, going to be a crucial time for everybody. But first, I just want to talk about what's been going on, because we've had 3 banks going down in the past week or so. It's been kind of crazy when you think about it. I think Silvergate is its own little thing, so we're not going to focus on it too much. But as far as Signature Bank and Silicon Valley Bank, here's just kind of a very simple way to understand what's happening with these banks, and so you guys can understand that why the government was forced to take them over and then do bailouts for their uninsured clientele, which is something that normally doesn't get happened. As all of you guys know, when you walk into a bank, you see this big old placard saying FDIC insured up to $250,000. Banks, the government is breaking that rule here to do bailouts. Now, as far as Silicon Valley Bank and Signature Bank here, guys, let's just kind of start off with how these banks made money. These banks made money by doing loans, but primarily they hold capital for large VC capital, venture capital funds and things of that nature. And then what they do is they typically buy bonds for that, so they're making money in the long term, they're churning, they're making revenue, and that revenue can pay for a lot of different stuff out there, but they're using that money to make more money, basically, right? But what happens is they were buying too many long-term bonds. And if you guys know anything about bonds, you buy it, you wait for it to mature, and then once the bond has reached that maturity age, you guys get the return on the investment for holding the bond so long, okay? You can do it that way, or you can trade the bonds by buying low, selling high, shorting, or you don't really short bonds, but buying low, selling high, okay? Now, what basically happened is Silicon Valley Bank, they were kind of stupid by overdoing the long-term bonds here, okay? So, when you think about a VC capital fund or a startup company, those companies burn through cash because they're not profitable. They're building and building and building, but they're not actually having new clients. They're not really a business just yet. They're building an infrastructure that they can use. So when they do get clients, make money. But it's a lot of fees, a lot of money you guys are spending. Well, basically what ended up happening here is your typical bank run. But normally when you have a bank run, the banks will start to sell some of their assets in order to fit some of those liquidity issues that they may have. Well, what's happening because of rate hikes by Jerome Powell, remember transitory, Biden transitory, Janet Yellen transitory, everybody was yelling transitory at the beginning of this inflation crisis. Well, inflation is a lot worse and stickier than anybody thought. If you guys remember, just last month, Jerome Powell was very dovish about inflation. Now, all of a sudden, before this debacle, we were looking at actually a 50 basis point rate hike in a couple weeks here on the 22nd. So, what's been happening is people have been buying a lot more shorter term bonds. And we actually talked about this before the crash at Silicon Valley Bank or Signature Bank. But think about it like this. A lot of people have been figuring out, like, I can leave my $10,000 in my savings account or my traditional account and earn like less than 1% interest on it. Or I can go out there and buy a bond for a year or 2 years, and guess what? I can be earning about 5 to 6% for just holding that treasury or whatever, 6% or 0.1%. So a lot of money has been moving out of the banks over the past few months as interest rates continue to go higher and higher and higher. Excuse me. So, because this bank, Valley Bank and Signature Bank, needed liquidity because people were taking the money out of a frantic fear, what ended up happening was their bonds that they bought for long term, they bought the bonds high and they were selling them low and not even collecting on the maturity for them. And so that meant they were taking huge losses. If you look at any bank right now, it can be a Wells Fargo, it can be a JP Morgan, it can be the Signature Bank, it can be any of these banks we'll talk about here over the next few minutes. What ended up happening was they bought too many long-term bonds, and this is why you see the Fed kind of making this new system where they can get out of those bonds if they need to. But if you look at any of these balance sheets on these banks, they have massive losses, but the losses are unrealized. Once these were realized losses suffered by Signature Bank and Silicon Valley Bank, they were actually realizing, if we keep on selling, we're actually not going to have enough money here. We're going to go bankrupt. We're going to go out of business. So they actually had a liquidity crunch here, which was kind of catastrophic. And you guys saw how this kind of spiraled out of control temporarily. I want to remind you guys before we start looking at charts and all this stuff that happened today. Remember how crazy the media's story about this changed, okay? This is why I always say be careful and don't always listen to the media. When Silicon Valley Bank went down on Friday after having the news kind of break on Thursday, Wednesday, something was wrong, what happened? Everybody said it was only going to be contained. There was going to be no contagion, no spread, nothing bad was going to happen outside of this. You just might see a few issues here and there. Then all of a sudden people realized that, hey, all these venture capital funds aren't going to be able to pay their employees. All of a sudden, on top of that, excuse me, you also started to see this effect where everybody was pulling the money out of all these other banks out of fear, and all these bond issues that we just covered, all of that was spreading to other banks as well, and the Fed didn't really understand that. The Treasury Department didn't really say that, because I'm a big proponent of Sunday morning shows like Face the Nation, Meet the Press. I forget there's one on Fox News Sunday and there's one on CNN. I think I don't watch the one on MSNBC, but no, MSNBC. I think it's Meet the Press, or maybe that's just NBC. Who cares? But basically, all these people, all these politicians came on and said everything is fine, everything is fine. Within a few hours, Signature Bank had been taken down as well. So I want you guys to understand that their job is to make everybody think everything is good and safe, even if it might not be. I'm not going to blame them necessarily for lying flat out to everybody, because I know they're trying not to spread panic, but understand their goal is to not spread panic. That's the number one thing they can do. Janet Yellen said everything was going to be fine. It wasn't going to be contagious. And then when she was asked directly, like, are other banks going to do that? She tried to sidestep the question and be like, well, our job is going to be to try to keep everything under control, to make sure this doesn't get spread out of control, to make sure it doesn't go to other banks. And she didn't really give a definitive answer. You want to understand and read between those tea leaves that if they're not giving you a definitive answer, that means they truly do not know. And because of that, we saw that, so I stayed up all night, guys. I had no sleep, so I took a nap today between like 12 o'clock and 2 o'clock or something like that. Or maybe like 11 o'clock to 2 o'clock, I'm not entirely sure. But I took a nap today. I didn't get no sleep last night. If you guys were watching CNBC yesterday, you guys would know that they brought in everybody for CNBC on a Sunday, which they never happen. CNBC Sunday is usually just filled with trash Shark Tank episode or something like that. They had everybody come on. They were announcing that they had a bailout, which this was a bailout, guys. I want you guys to understand this is a bailout, but for political reasons, they're not going to call it a bailout because the banks are still going to go under. But at the same time, I think there's still good opportunity. They're going to try to do a second bid for Silicon Valley Bank here. So they're going to try to save the bank on top of everything else. See? So they're doing bailouts right now. It really sucks because living at the 2008 financial crisis, bailouts are kind of shitty things, where the taxpayer has to front all this money. And, I think the number one thing that's been taking all of the American money so far, as what ticks people off, has been the Ukraine war and how, they're spending billions and hundreds of billions of dollars over there, but not even fixing the homelessness crisis we have over here, the simple stuff that, everyday people see. But on top of all that, everybody, we now have to worry about this going forward over the next few weeks. And when the news broke that Silicon Valley Bank was saved, it happened before Signature Bank news broke, okay? So when that happened, they tried to put them so close together that the good news with Silicon Valley would overshadow the Signature Bank. It didn't work out like that. If you guys saw the press releases, they tried to manipulate the press, which again, I don't blame them for. They're trying to stop the panic. But again, I always feel like the government forgets that Twitter is no longer like an instrument of government. They don't silence people like they once did. And then on top of that, TikTok, everything can spread like wildfire these days, right? So what we have to focus on now is what is Jerome Powell going to do? Is he going to pause rate hikes for a couple months? Is he going to cut rate hikes after cut rates after everything that happened this past week? Or is he still going to go on business as usual, 25, 25, 25 a few more times here? I honestly, at this point, have no idea. If I were Jerome Powell and you put this huge backstop in for the banks to make sure they can do whatever they want to, frankly, right now, I would continue moving on with the 25 basis point rate hikes, but that's me. We have all been talking about how we don't think Jerome Powell is going to blink because he doesn't want to be seen as a vulgar. Vulgar is the guy back in like the 70s, 80s who he stopped raising rates too soon. He backed off too soon, which caused another massive spike of inflation, which caused him to have to raise rates even crazier high levels, and that really like killed the economy in the short term. I think he still wants to raise rates. I do believe that. I don't think we're going to have a rate cut, but at this point, I am taking a blind guess right now. You guys can hear the thought process here, but I still think that we're going to be having a simple 25 basis point rate hike, and I'm going to be so interested to hear exactly what happens during that meeting. Now, there are a couple ways he might not do a 25 basis point rate hike here. The first one is going to be, before we start looking at all this charts and stuff, is maybe tomorrow and Wednesday when we have the CPI data coming out tomorrow and we have PPI data coming out Wednesday, maybe inflation is going to come down drastically, all right? Maybe that's going to be a big event. Maybe that'll be very, very good, and that will give him the breathing room to say, hey, we're still going to do 25 basis point rate hikes, but we're going to take one meeting off, and we'll continue on the 25 basis rate hikes a couple months down the road, all right? Now, I'm still waiting to see if that's going to happen. However, if inflation is hot and bad tomorrow, then he's going to have to do 25 basis points no matter what, and things are going to keep on buckling, and we're going to be in this really freaky situation where the stock market may be crashing down more aggressively than it has in the past, and we're going to kind of have to deal with that in the short term here. The other thing about Bitcoin is Bitcoin responded to the SVB news, the Silicon Valley Bank bailout news, a lot better than everybody else, because I think that meant that the stable coins out there like USDC, diversified Tether, Coin, they were all going to be perfectly fine after they figured out a way to get back to stability. Now, they all have, I think, at this point in time, let me check before I tell you guys this. Yeah, everything's about 99 cents, 98 cents. It looks like they're almost there. So we're close, guys. But I think that's what gave everybody the reason to be buying back in here, and I am happy about that for the short term here. We'll talk about more of the charts here in a second. Tomorrow I will be live in the morning as we go over CPI data. I'm not going to be streaming too long today because I really do just I have to go to the store and get some duck. And then I'm going to just flat out go to bed and wake up to do another huge day because I've been doing a lot of stuff today. I had to do a few calls with some guys in Europe, and if you talk to anybody from Europe, you got to usually be up in the morning or hours to talk with them. I had a friend over in Spain I needed to get into contact with. But at this point, everybody, a huge indication of how bad things are going to be for this next quarter, which is quarter number 2 coming up here pretty soon. It's really dependent on the inflation numbers we have coming out tomorrow. And so it's just going to be a madhouse for the next few weeks. If we go over here, and now we can go back over to display. If we go over here and we check out the stock market today, the Dow was sideways. I don't know if any of you guys were up at 2 o'clock, 3 o'clock in the morning like I was watching the Asian markets. Everything was going more sideways. Everything was going more sideways for most institutions out there. But towards the morning hours, towards the at one point we were really rocketing up as far as futures were concerned. We opened up strong. We opened up weak as far as futures were concerned this morning, and then we went sideways from there. But the financial sector really got hit. What I wanted to show you guys here is this. These are all the regional banks in the United States of America going from market cap from highest to lowest. You guys don't really have to worry about the names here, to be frank. I'm not too concerned about it. Or maybe what I can do for you guys here is there a way to change this? No, there's not. No, there's not. Okay, well, it doesn't matter. You can see $58 billion market cap down 10%, 5%, 17%, 3%, 13%. Banks are getting slammed, and this is even with the government coming out and saying that you cannot short banks because they want to help the stability of the market. So they're going to be stopping people from shorting banks. Whenever the shorts are allowed to target banks again, expect things to get a lot worse. A lot worse here, guys. let me just show you guys some of the names that we're talking about. I can zoom out as well for this one. There we go. You guys just might not be able to see it as well, and I apologize for that. But U.S. Bank Corp, down 10%. PNC Financial Services Group, down 5.18%. Truist Financial Corporation, 17%. M&T Bank, down 3%. Fifth Third Bank, down 13%. And it goes on and on and on. Even First Horizon Corporation, down 20% today. These are massive amounts for small regional banks to come down. It does matter a lot. And then one last thing I'll say here before we look at some other banks is these are only the United States banks. If I were to go over here to the any banks and like not United States, we have banks over here. What is this? ICICI down about 2%. HDFC Bank Limited, that's Indian. Oh, those are both Indian banks here, so they're not really associated with tech in any way as far as our tech system, which is full of money. USA one over here, 17. The Brazil one down to 1.75. Mizuho's down 5. That one's Japan. This Brazil one's down 2. Deutsche Bank over here. Deutsche Bank, I can't pronounce that word. Not even going to try. 2%. So you're seeing it's not just in America, but our banks are taking the brunt of this. That's the thing I wanted to explain to you guys here. Last thing here is, let's get out of this. There we go. These are the U.S. banks that are diversified. You guys will know these names quite a bit. Bank of America, Citigroup, East West Bank Corp, JP Morgan Chase, and Wells Fargo. East West Bank Corp, that is down 17% today. Citigroup is down 7%. Bank of America is down 6%. JP Morgan is only down 2%. JP Morgan seems to be the one that everybody is trusting. It's like the tether right now of this banking system. And then Wells Fargo down 7%. 7%, guys. Remember, this is a $144 billion market cap, and it fell 7% in one day. But if we go over here, actually, let me just show you guys this before we start looking at Bitcoin. Just so I can explain this to you guys. Let's go to March. Okay. Since March started, we've come down 18% in 16 days, 12 trading days. Oh, actually, 8 trading days, excuse me. 8 trading days, 12 days. We've come down 18%, and this is with a multi-$100 billion market cap here. Things are getting kind of spicy. We're heading for a support zone, so maybe banks can try to find a way to bounce from here. However, again, like if we start breaking down below these support levels again, banks don't really have much support beyond that. Remember, interest rates help banks out. That's one of the reasons that we've been able to kind of stay steady afloat. Interest rates in general help banks out, but if they're having liquidity issues here, we get a lot worse off. Okay, that's the main point I'm trying to convey to you guys. I'm going to get out of all this Finvis stuff now. Crypto market's doing okay. Interesting enough, Bitcoin did a lot of good stuff today. Maybe Ethereum did a little bit as well. Most altcoins were not having some robust moves over the last 24 hours. So now we'll kind of take a look here at what's been happening with the traditional crypto markets here. Look at this over here now. Great move. Something that's curious right here is the change of character. I'm going to ignore this change of character based off of all the volatility we had. But if you guys normally go with the change of characters, if I turn the colors here, you guys see that traditionally they do work out very, very well. And I'm looking at that for sure. But my, oh my, am I just a little scared about what happens tomorrow going into CPI data, Wednesday PPI data, and then Friday as consumer sentiment data comes out for us. So trade that as you may. I know a lot of you guys were liking the new video that I just posted on the channel. I don't know if I can even find it on my channel here. I think I posted like a couple days ago about the 15-minute chart. Some of you guys shared with me some profit, so I was really happy about it. Yeah, the Smart Money Concepts day trading strategy. So some of you guys were asking me about this. I said trade it carefully because you know there is some risk here, but it looks like it ended up working out very well. So when you got the buy here, signal here with the green change of characters, it looks like that was, well, actually, if this was buy over here, so you wouldn't have actually bought that one, you would have bought this candle right here. It seems like it actually worked out very, very well here. You're still in the buy zone, so you don't have to worry about the change of character here, and then boom, you still keep on going up. And of course, it still looks like we're fairly bullish on the Bitcoin chart, at least for the next few hours. CPI could always destroy any momentum we have, but as far as I'm concerned, Bitcoin technical scream it wants to break out above 25,000 and just start slamming up to $28,000. Okay, so for you guys that were doing the day trades, awesome. I'm in talks right now to do a Fairdesk copy chat program or copy trade program. Excuse me, I'm thinking too much of Chat GPT. But so if you guys want to follow along the trades that I do this for free, I'll be sharing more with that over the next week or so once I kind of figure out the terms of the deal they want to do. and then we'll probably start probably after I get back from Las Vegas at the end of the month. But I'll probably be setting everything up so you guys can follow me, and I'll probably do some trades even maybe while I'm in Vegas. Who knows? As long as I can have my laptop over there. But yeah, so Bitcoin right now still seems solid. This big move that we had bouncing off of the 200 weekly moving average, daily moving average, we had talked about it a little bit. If you guys wanted to buy, that was it. I did a hypothetical buy with you guys while I was live. It wasn't a real buy, but it was at 20,400. I'm not even sure if it would have got stopped out, to be frank, because of all the chaos going on. But it would have made a little bit more money if you had bigger cojones than I did, right? I think we were looking for like a 5% downturn, so like 20,400. Okay, it would have almost stopped out. It's been about 4.5%, so barely. So you know, if you go through the 5%, okay, sure, but most people probably would have sold out of that one, honestly. But okay, now if we're going over here, let's go over here to where's my little Ethereum? There we go. Ethereum also managed to bounce off, and Ethereum skyrocketed back up here to resistance levels. Now, all of a sudden, everything is waiting to try to break out above their former resistance levels and get to that next level. As far as Bitcoin and Ethereum, you can see right now, Ethereum is already breaking above its 50-week moving average and wants to close here. If we break out, we're most likely going to go to at least 1,800, and if not, like 1,900, 2,000, which is going to be freaking insane. The only way, though, we get up to $2,000 with Ethereum, which I now think is back in play, is if CPI is drastically lower tomorrow, because then what most investors out there will infer is that Jerome Powell is not going to have to do any more rate hikes. If Jerome Powell doesn't have to do any more rate hikes, you're going to see the overall market start to boom and boom and boom until eventually we go into this recessionary cycle caused by high interest rates, which is still going to be coming, but there's going to be more of a dovish feeling until we start to see the economic data really start to shift. Before we start, talking about maybe a little more economics, Bitcoin's doing that exact same move, but also looking at that resistance level up here of the 200 weekly moving average here. That's kind of around 25,363. If we start breaking above that, Bitcoin could possibly get back up here to 27, 28,000, $30,000. I'd probably say conservative and do $28,000. I do think it's possible, but it would probably happen towards the end of this week and then going into next week as we hear more about what's going to be happening with rate hikes as far as Jerome Powell, okay? Now, one other crucial thing here that's like slipping my mind as I try to explain it to you guys. How do I want to articulate this for you guys? The fact that this banking crisis just happened in and of itself is actually a deflationary event because just think about it in terms of how like you guys might if it was you, imagine you guys had $5,000 in your bank account, and you guys, every month you put $5,000 of earnings into it or something like that, and all of a sudden your bank goes under, but you get saved because you have insurance, or even if you didn't have insurance, the government comes in and saves you. You're kind of going to be a little bit scared to start spending money again. You might actually just try to save it and hoard it until you figure out that everything is fine, you're okay, you don't have to worry about stuff, right? So that in itself is going to force a lot of these venture capital funds and even some other businesses out there, maybe even people like you and me out there, to say, whoa, I shouldn't be spending as much money right now. This seems to be a lot worse than I feared. I'm just going to save money and spread it out amongst a few different banks now. So if this bank goes down, it's $250,000 FDIC insurance, maybe $500 over here with the SPIC. You guys get what I'm saying, okay? So in and of itself, it was actually a deflationary event, which probably won't show itself this CPI report, but possibly over the next 2 monthly CPI reports, you may actually see better than expected inflation numbers. That's if Jerome Powell also stops cutting. I would have to assume there a little bit. But if he continues or stops raising rates, if he actually decides to keep on raising rates like 25, 25, 25, which I think he's probably going to do, you might see inflation come down even more drastically, and we might go into a recession sometime Q3, late Q2, and just get it over with, more of a mild one, and then pick ourselves back up a little bit here in 2024 without having a rocketing boom, but instead of kind of grinding back up with these big overall waves and channels, which eventually break out probably more mid-2024 or 2025 here. So there's a lot of good optimism here, guys, over the past few days, but let's go back over here to some other stuff now. Let's go to Matic. See, Matic's come back up, but not nearly as much as Bitcoin to those resistance levels. Dogecoin over here, back up, but not even past the breakout point, not even close. XRP got back in here, still hasn't broken down, which is pretty darn crazy. But again, not back up here. We're all still facing these downtrends here. Link came back up, not as high, but hey, we'll have to take it. STMX, Sheeb, we're making moves, but we're still not in a good spot here. A lot of the momentum was shifting back to Bitcoin today. Even Litecoin here is getting rejected off of this moving average, or seeing this old level of support that was around $81.62. I could see us breaking above that fairly easily with good CPI data. But guys, yowza, yowza, yowza. You can clearly see there's a wall right here, a pretty nice wall. We're going to see if we can manage to break above it. You're seeing us stagnate. The longer we stagnate, the more likely we're going to be coming back down. But even if we come back down, would I short it? Probably not, because we could always have some type of dip and rip going into the CPI data. As far as how I'm concerned, I am not trading anything tonight or tomorrow until I get the CPI data report. From there, I'll manage my trades a little bit differently. But it looks like those day trading techniques I was showing you guys about over the past few days, they seem to have worked out here. I will be putting out more videos like that, and also using other indicators besides the Lux Algo one here pretty soon. I might use Chart Prime's indicators here fairly soon. Anything that I can find that gives you guys like an edge for different types of strategies, I'll help you guys by making more tutorials here, because it seems like those tutorials are being beloved by you guys, and I appreciate that a lot. I think the tutorials that I've done over the past few weeks, they have led to over 2,000 new subscribers for the channel and the stream. So I appreciate it a lot for you guys kind of joining in. I saw that a Japanese influencer that does crypto posted one of my videos, and it got like 70 subscribers just from him posting about it and trying to do a tutorial based off of my tutorial. So it's kind of nice to see that, hey, people are using my tutorials to teach people how to trade in other languages. And I'm not even asking for money. I'm just like, oh, that's pretty cool, isn't it? So I'm going to keep on doing a lot of tutorials here, and I'll keep on doing some of these news videos as I need. I can't do as many news videos as I would like, just because I only have so many notifications YouTube will send out to you guys. So I might make another channel here fairly soon where all I do for that channel is do news. So breaking news or news events in the crypto, blockchain world, finance world, whatever. And then I could wear my sunglasses 24/7 for those. But I don't like to wear my sunglasses all too often, as you guys know, unless these quality production lights, whatever, get in my eyes. One thing here before I start to answer you guys' questions is just stablecoins. How are they doing? You see Coin here is back up to 99 cents. Not a dollar just yet, but you can see it's come back up quite a bit, and I do like the way we're looking at as of now. UDSC almost back up to $1, but at this point it's fairly good standing, I would say, fairly good standing. It looks like on Binance itself, somebody really tried to tank the price, and it dropped all the way to 33 cents for just a second. Twice, it looks like, within like a half an hour period of time. Kind of scary there, but at this point it seems like it's back up there. Everything's fine, especially because Circle and the USDC kind of getting bailed out by the government at this point, which is interesting to see. Market cap has kind of gone back up bit by bit, but still a lot lower than where it was at the beginning of this. We started off around a $43 billion market cap. It's back down to, looks like, $39 billion. People are still selling. People are still selling. Okay, so don't be confused with the price going back up to $1 to people actually being more confident here. If it's back up to $1, most people are going to be saying, I don't want to deal with this anymore. I'm just going to move with the Tether, because Tether was above $1 when everything else was crashing and burning, right? As far as USDD, which is decentralized US dollar, this is at 0.98698, so almost 99 cents, not as close as we want it to be, but it's getting back up there bit by bit, which is also another good move out there. I'm going to keep a close eye on everything here over the next few days, but I am not wanting to get exposure to this market at all. Day trading seems to be the way to go. Dollar cost averaging is always something I'd recommend you guys want to do for long term here. But for swing trades, did I swing trade this? No, I didn't swing trade this. I thought about it with doing that, like the potential buy-in right here, just to kind of do an educational lesson at these levels of support. That would have worked out, sure, but did I actually make the trade myself? No. I'm going to be extra cautious right now because, like, at this point, the government just said on Friday this was only going to affect one bank. It was their issue. This should not be going to other banks. Saturday, we heard the same exact thing, where they were going to try to sell parts of the bank off. Is there going to be a bailout? Is there not going to be a bailout? Sunday, we heard that this is not going to happen to any more banks in the morning hours, and there's going to be a bailout for Silicon Valley Bank. Then by Sunday evening or afternoon, we heard that Signature Bank also got taken over. So all of that, everything is going to be fine. Everything is going to be fine. All of that all that shit hit the fan at once, and everybody was like going up, down, very happy, very bad. Everybody could read whatever they wanted to in the tea leaves of all this news. But I would still say this shows kind of how bad our financial system is right now. And if you think about it, Silicon Valley Bank, guys, was ranked had an A rating from Moody's here just before it crashed. So, again, I still am probably not as confident as the other institutions about the rating scores of major banks out there. Now, A rating is not the highest rating you can get, but it's still an A rating, right? It's not a double A or triple A like you might want to see, but it's still an A. That still is in good standing, right? So we'll keep an eye out for everything. I'll keep everybody updated, but am I trying to do some gung-ho trading right now? I'm just not. I really don't feel like I need to be trading at this point. These smaller day trades seem to be doing just fine. Like I showed you guys over here. I think I have this other one, load Lux. So for this one, you guys know I've been looking at, if you guys watched that day trading video, I was using the 15-minute chart as well as the super trends out there. And so basically what you're looking for here, this is the 15-minute chart. Let's get rid of all this other stuff, the algorithm, and let's get that's fine for now. This is the low, this is the 200 daily moving average as far as Bitcoin's concerned. And you can see kind of all these change of characters in here. This change of character that kind of had a little bit of a dip. This one right here that kind of had a dip. That one that worked out okay. This one didn't work out. Basically, we're trying to figure out a way to get out of those, some of those false signals here. All right. So what I'm actually going to do very fast, just to make my life a little bit easier, because I don't like the colors on this one, I'm just going to open the free smart money one so you guys can follow me along here. Color candles. Forget about the structure. Forget about the structure. Internal blocks. Forget about all that. We don't need any of that right now. Okay. So you guys can just see red sell signals. You can tell there's a bad signal there, bad signal, or good signal there, actually good signal there, but not really good signal here, a good signal right there. If I add the super trend indicator on here, and for the 15-minute chart primarily, if I go over here and I do the 50 and the 5.1 ATR, hit OK. What this is basically doing is when I have these colors, I normally am not going to really go against the grain here, okay? So when I buy, there's a few things I need to see happen. I need to be a green change of character. I need the candle bars to be green. I need to have a buy signal here. But on top of that, I also need that on the 4-hour chart. Let me just add another super trend here. So let's get over. This is the 50 then, I assume. Yeah, okay. Here. So when I go over here on the 4-hour chart, if I'm going to be longing on the 15-minute chart, I also have to make sure that my change of character is also green. So I got a green change of character here. This was at about 9 o'clock. See, 9 o'clock in the morning my time on on Sunday, right? So let's go back over here to the 15-minute chart and the buy. This is Sunday here. There we go. So this is telling me based off of all that, and I put this back over here to the other super trend. When at 9 o'clock, when I had that green change of character, and then go to smart money over here, it was green here. I would have placed a buy right here, and then boom, you know, you're waiting a couple hours, honestly, before the move starts off. But you're looking pretty good, okay? You guys want to have that level of confirmation here, and even if it turns red part way in here, the way I've been doing it is, as long as the 15 is still showing me green, as long as the 4-hour is still showing me green, I am perfectly happy to make a trade like this, okay? If you want it to be even more bullish, you can wait for the daily to also turn green, but usually that may take too long on a short-term reversal like this, so the daily is really like a questionable one at that. But you can see so far still the buy signal as far as the super trend ended up working out. We just had another change of character here. So far it's still working out if you guys are still using the green super trend level, okay? So, so far this strategy has been working. I'll be doing a lot of copy trading using this type of strategy here when I can. But I'd rather be doing that type of trading than trying to hold this thing for, like a week or so and try to play a larger swing type of position. the move down from here to about here, when we kind of hit this support level over here, I didn't get the bottom. I don't care. I still shorted at a higher price, and I sold, closed the position at a lower price. I made money. That's all I care about right now, guys. I am not going to be chasing these larger moves. There's no reason for me to do it personally. My strategy has just been to catch the momentum, trade with it, have fun, and trust the signals that have been playing out fairly well for me so far, okay? Now, if you guys have any questions, let me know. And we'll be taking some time here today just to kind of go over some basic stuff. And hey, Tony, happy to see you. Hey, the Real Transporter. Hey, Shelly. How many of you trade full time? Oh, they're probably asking everybody else that. Hey, Mike, hope you're doing well. I am doing very well today. I helped my mom clean her freezer out today. That was pretty inspiring. I came to like, hey, do you want this? You want this? You want this? She has so much shit in her freezer, and she never knows to get rid of it. She's like, she'll buy a pork roast without understanding she has like a prime or not. She has like a prime roast already in there that she bought and spent like $100 on. I'm like, you got to eat this first. But yeah, I did a lot of simple stuff here today. And hey, Ken, happy to see you back as well. Island Time, as always, happy to see you. And hey, Jonathan, yeah. I mean, it kind of sucks. We did do a bailout, guys. I don't know if you guys watched CNBC yesterday, Sunday. One of the main hosts said, okay, well, this sounds like a bailout. And then Jim Cramer is getting mad at him for calling it a bailout. It's a bailout, guys. Like, you could say it's a bailout that needed to happen because people needed to have trust in the banking institutions. You could say that people might not like it, but it's better to just stand up for your convictions. Jim Cramer is saying it's something. This is a bailout, guys. This is a flat out bailout. Right? This is a bailout. It's unfortunate, in some respects, but at the same time, I'd like to people keep on making their money. I'm okay with it in some respects, but I know this is just going to encourage bad behavior down the road because now you're not insured up to $250,000. You're insured unlimited, limited insurance right now, which is going to be freaking wild. I don't know if any of you guys have seen. Oh, let me just pull this over here very fast. I don't know how many of you guys have seen the movie The Big Short. Actually, you know what I can do? I can probably find this on Twitter and not get in trouble with YouTube. So let's go over here. Oh, I don't think I liked it, but that's okay. I can find it over here. Oh, I might not be able to find it. Actually, this might do the trick here. We'll see. Okay. Okay. It's this thing here.
Doctor's always busy. I end up taking any appointment. Point partners. How can Standard & Poor's help you?
Well, we don't understand why the ratings agencies haven't downgraded subprime bonds since the underlying loans are clearly deteriorating.
Well, the delinquency rates do have people worried, but they're actually within our models.
So,
Says here.
you're convinced the underlying mortgages in these bonds are solid loans?
That is our opinion, yes.
Correct.
You can almost think about the same thing instead of like loans like this. Think of more of the bonds market that all these banks are heavily invested in right now. Longer term bonds whose prices have been following inverted yield curve, inverted lower bonds up, longer invert, right? Thinking about it like that, okay? But they're talking about put bonds in the mouth and not the loans, okay?
Tape, have you looked at the loan level data?
What do you think
I
we
mean,
do
you're giving
here
these
all
loans
day?
to anybody with a credit score and a
Excuse
pulse.
me, sir, what do you think we do here all day?
I'm not sure. That's why we're here.
Here's what I don't understand.
We check, we recheck.
If these
we check
mortgage
again.
bonds are so stable, if they are so
Perhaps you could
solid,
check your friend.
have you ever refused
We
to
stand
rate?
behind
That's
that.
delusional.
We
Georgia,
stand behind
have
that.
you ever refused to rate any of these bonds upper tranches AAA? Can we see the paperwork on those deals?
Oh, I'm under no obligation to share that information with you,
Just
whoever you
answer
might
the
be.
question, Georgia. Can you name one time in the past year where you checked the tape and you didn't give the banks the AAA percentage they wanted?
If we don't give them the ratings, they'll go to Moody's, right down the block. If we don't work with them, they will go to our competitors. Not our fault, simply the way the world works.
I feel like that's basically what's happening again, but instead of like mortgage rates and stuff like that, which now have extra regulation added onto it because of the financial crisis back in 2008, I feel like they were looking for another way to make a bunch of money, and they found it through trying to do these bonds here, and now they're having issues because remember, we have regulations in this country. As much as we don't, like, we want to say, oh, we don't have strong regulations, we normally look into banks quite a bit here. A lot of banks, like the J.P. Morgans, the Wells Fargo's, they run stress tests. I'm sure you guys have all heard about this. I feel like we're in a different era here, but I feel like in a few years now we're going to have another movie talking about how all this chaos really unfolded, and there's probably going to be some movie like Margin Call, if you guys haven't seen that one, where they talk about how Silicon Valley Bank just fell within 48 hours, but maybe the few weeks leading up to it when they saw something was going to happen, and you saw all the executives start to sell off a large amount of their positions, like make millions and millions, like the CEO sold off like almost $4 million worth of stock before the crash. I want to see a movie about that. I would pay to see a movie like that. Probably not. I'd probably want to see it on Netflix or HBO Max or something. HBO Max has the best movies, so I would say HBO Max. But yeah, you guys can clearly understand kind of what pickle we're in right now. And my job here is not to spread fear. Like, I wasn't trying to spread fear on Friday when I was telling you guys I don't trust the politicians and the institutional bureaucracies coming out and saying, hey, this isn't going to happen to other banks. And then, like, within 2 days, of course, it happens to the bank. I just want you guys to understand the government's job is to try to keep everybody calm during an event like this. So take a lot of what they say with a grain of salt. Make sure that you guys just, if you guys have hundreds of thousands of dollars out there, I know that's not everybody that's watching this video, but I do know a few of you guys that have millions. So, make sure your banking is diversified at this point, even though it looks like the government will backstop anything and like really break that FDIC rule that they have. It's still better to be safe in this type of environment, and I still refuse to trust the bureaucrats at this point. Even after, I don't know if you guys saw Biden's talk today. I should actually show you guys this because it was kind of important. Probably not the whole thing. I don't know. 60 minutes long. I wonder if the White House has it. The White House doesn't get mad if I play it. ABC News might get mad if I play this. Streamed 4 hours ago. Economy is 12 hours. They did not play the banking one. Wow, they didn't play it. Okay, here we go. Okay, 60 minutes.
Guarantee that is the assets of depositors.
Learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall. I instructed my team to act quickly to protect these interests. They've done that. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers.
That's not true.
Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law. And finally, we must reduce the risk of this happening again. During the Obama-Biden administration, we put in place tough requirements on banks like Silicon Valley Bank and Signature Bank, including the Dodd-Frank law to make sure that the crisis we saw in 2008 would not happen again. Unfortunately, the last administration rolled back some of these requirements. I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses. Look, the bottom line is this. Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you, we will not stop at this. We'll do whatever is needed. On top of all that, let's also take a look at a moment to put the situation in a broader context. We've made strong economic progress in the past 2 years. We've created more than 12 million new jobs, more jobs in 2 years than any president has ever created in a single 4-year term. Unemployment is below 4% for 14 straight months. Take-home pay for workers is going up, especially for lower and middle-income workers. And we've seen record numbers of people apply to start new businesses, more than 10 million of them. More than 10 million applications over the last 2 years starting businesses. Now we need to keep this progress going. That's what swift action that my administration over the past few years is all about. Protecting depositors.
This is going to get more into the political speech. You kind of took a jab at Trump. From what I understand so far, from listening to some of the bankers on CNBC, Fox Business, and Bloomberg, none of the Trump cuts, and you can decide if they were good cuts or bad cuts, none of the cuts would have actually affected what happened today with Signature Bank and what happened with Silicon Valley Bank. None of those would have affected it. I think just like I think it's just a political attack, frankly, like how he did with Trump with the train and the spy balloon stuff. Like if there was a spy balloon in the air that was wondering Trump's presidency, oh yeah, Trump was the one that deregulated the rail industry when the deregulations didn't have anything to do with that. It's a smart attack. I'm not going to get wrong with that, but it's just not honest. But politics isn't really an honest person's game. And then he's coming out and he's trying to build confidence, trying to make people feel more confident about it. The more this kind of went along, I don't think people really got the confidence they were looking for, which is why the system is still kind of buckling at this point. I think he should have stayed and gave questions. I think the thing that really messed him up in the short term here with today is at the end, I don't know if I can find this here, because his speech yeah, there you go. We were almost at the end of his speech, so I can just play the rest of it right here for you.
Protect right now. God bless you, and may God protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
Do you expect other banks to fail, Mr. President?
That was President Joe Biden.
And then for whatever reason, this guy has a problem articulating and talking to reporters, even reporters who are, frankly, kind of like, on his side. And so I think he should use the fact that reporters are pretty generally nice to him, except for, I would say, Peter Doocy. Peter Doocy is definitely one that asks him more tough questions. Maybe some reporters in the back that I'm not too familiar with. But, he has to come out and try to give maybe feel more confident. I don't think he really did that today. And I think that's one of the many reasons, not the only reason, one of the many reasons today that we saw the overall market kind of do this crazy roller coaster of ups and downs, while overall the financial sector, if I can just go over here to finish this very fast, you saw that financial sector, just get freaking demolished over here. My head's probably blocking it, yeah. Really just get demolished. Schwab, like Charles Schwab. Charles Schwab owns TD Ameritrade. They own TD Ameritrade. They've gone from $76 down to $52. All right, they're down 11.5% today, and at one point they were down a lot more. I don't know if I could figure that out. Let me go to So let's go over here from that $76. Yeah, at one point through 4 days they were down 41%. This is Charles Schwab. You guys see the commercials. This is a trusted institution. Down 41%. Are you kidding me? Now, since those lows, we have had a bounce of about 17%. You can see how volatile everything is going right now. It's a freaking chaotic piece of shit, the market at this point. So just be careful, okay? Sorry to get out there and curse, but damn, people. Day trading, swing trading, do it all, but just don't try to trade for too long here, understanding that now all of a sudden, because of these crazy moves, if we go over here to, let's just say the what am I looking at here? Daily charts. Apple's now getting back up here to this resistance level. Amazon is now trying to hold some new support and try to break out above the 20 and the 50. AMD is getting back up here to resistance levels again. Google making its way back up, but at least finding some type of short-term version of support. This one's actually not as good as other ones. Tesla bouncing off strong off the 50, that's fine. Nvidia more sideways. Microsoft still going strong on the sideways action here. They're in a very simple way, I should say like this. The market is preparing to be able to choose whichever direction it wants to in a hurry. Normally, you can see that the market's looking weaker, then eventually we break. Normally, you can see when the market's trying to break out, then we break up on the upside, right? Right now, we're just going so roller coastery that eventually we're going to have a couple big moves, boom, 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 a couple bad moves, boom, boom, boom. Whichever way, CPI data tomorrow, PPI data coming out Wednesday, and then the consumer sentiment on Friday. My oh my, we have a lot of potential good things coming our way, or a lot of potential bad things. All of it exacerbated by this banking disaster. If CPI is hot and they raise rates to 25, do we trend down? I would say the 25 basis point rate hike won't have too much of an effect on the overall economy at this point, or not economy, on the market at this point. I think his presentation or his speech to, or I don't know, answering questions with the media, that'll have a large effect. But I think as soon as we have inflation data for tomorrow and Wednesday, we'll know if it's going to be a 25 basis point rate hike. So the market will start pricing that in tomorrow. If inflation is low, that'd be a great sign Bitcoin will easily break above 25,000. And then all of a sudden, everybody is going to get a lot more bullish. Will I still be bearish? You better believe it. But again, if people are trading like this and you guys want to do some day trades, by all means, have some fun and go for it. I mean, go for it. I am just one of those people that's like, you know what? I'm going to be doing some day trading, maybe a little bit of swing trading, no more than like 24 to 48 hours. But, you can't not make money on it, like an opportunity like this. You just have to play it smart and don't try to go all in because you think that all of a sudden, even though the economy is shit, banks are falling like flies, that somehow the market is just going to keep on going up like nothing happened for the long term. That's not the way the system works. And we've had events like this happen before. I don't know if there's an easy way to show you guys this though. Maybe if I go to watch list, actually I can just go to my normal one. Maybe I go over here to the SPY, I go to the daily chart, I get rid of all this stuff, I make this into a full screen one. Let's get rid of all this stuff. We'll keep the order blocks on for now. Let's go back over here to 2008. Okay, so right here in 2008, in October, this move right here, I forget exactly what it was. This big move we just saw here was a bank bailout. Boom. And then what happened afterwards? We found a new low. All right. Now, we're not going to follow this exact pattern. That's not what I'm saying. But bank bailouts traditionally do have a good move. It brings some calmness until people realize, like, oh, shit, things are getting worse again. And, the system can't keep on doing it, trying to fix it over and over and over again. The panic gets to be too much. At this point, they did a good job of quelling things down, or an okay job of quelling things down. But if it starts to happen again, it's not like they have unlimited ammunition to really fix this, because it's not going to be so much of a liquidity issue at a certain point. It's going to be more of, do people actually trust the institutions? And if they don't trust the institutions, things will get bad in a hurry. Bank bailout dates, 2008 financial crisis. I don't know if this goes back to what we need. Okay. TARP. See? Yeah, like the Treasury Department bought $20 billion in shares from each from Bank of America and Citigroup. I mean, imagine the government just like literally putting money into stocks to force them to go up because there's no other way to fix it. I've been like, think about it. It's really crazy when you think about it. And then, they should just keep it in there and sell for a profit. I mean, I don't think, it just, oh God, chaotic times, right? Just very chaotic times. Let's go back over here, back to Bitcoin. and you can definitely see a wild move, but we're still at this resistance level. I'd be more careful about buying into this. But if you guys are kind of a little bit more of risk takers now, you guys can always buy in and be like, hey, look what just happened with us. We're at resistance levels. The 50-minute chart, we just had to change the character right here. We're still in that buy signal from the super trend. Maybe we might try to make a move back up to $25,000 tonight before we see that CPI data coming up. Ooh, excuse me. Sorry, guys. So, take your time, play it easy. I'm less likely, honestly, to do day trades into major levels of resistance. I'm much happier to do them over here or over here at the base when everything is kind of screaming buy at you. But just understanding it, we're not out of the water yet. We'll probably get out of there eventually. But the consequences from all this are going to be around for months. We just bailed out 2 major banks. These are not small little banks that they're trying to make you believe. They're monster banks. A lot of important hedge funds, businesses have account in these banks. So the fact that they bailed them out is a huge deal. I mean, again, the fact that we had to bail them out and we're not even in a recession, what does that tell you? We had to bail them out and we're not even in a recession. What happens if we have, what happens when we go into a recession? How strong are these banks going to really be? So, call me a crazy person, but I think banks do their best to make as much money as they can in the gray areas of the law, and that usually comes with an increased amount of risk, which normally ends up being passed on to the everyday taxpayer once everything comes crashing down in a really bad economic environment, in which this case is a high interest rate environment with high inflation. Yeah, not really the best time to be alive, is it? Or, doing this type of stuff. Sure, if banks go belly up, they offer 20 cents on the dollar. Exactly, right? See. And hey, Nico, dude, I'm happy you made some good money today. Oh, what's right here? Sleepy Joe. Joe can't talk unless there's a teleprompter telling him what to say. What do you call, as far as Joe Biden, he's just old. I mean, he's just old, right? He's just old. There's no way to say it. But I don't think at this point Democrats have somebody else they can really put in his place besides Gavin Newsom. I think he's the only one that has an opportunity to become the leader of the Democratic Party. Kamala Harris, I don't think so. All the black people I know don't like Kamala Harris, and you got to have black support if you want to win the presidency. And I don't think Mexicans like Kamala Harris either. I'm half Mexican, so I got a few Mexican friends, but they're much more. Actually, they've been turning more conservative, which has been interesting, which is really surprising to me because they used to be so liberal. Not even liberal, but just moderate Democrat. I would say they're not really progressives. But again, reading a teleprompter for me is hard enough. That's why I have to wear glasses. What do you call sunglasses when I do those videos? But I'm not a politician. I haven't been doing this forever. He's going to have to find a better way to articulate his thoughts to keep the market and the public informed and happy. Because again, I was talking with one of my friend's moms because she knows I deal in this. I'm in this world every now and again, and she was asking me if I trusted what the government was saying over the weekend. And I was talking with her yesterday and her husband, and they were asking me like, "Hey, we have money at J.P. Morgan. Are we safe?" And I'm like, "Oh yeah, you're safe at J.P. Morgan. I have my money at J.P. Morgan." But then I said, don't be surprised if you catch the government lying to you at a point like this, because they're trying to keep you calm and not panic. And then her husband, who's a very progressive guy, and he's more of he trusts the government when a Democrat's in power, and he doesn't trust the government when a Republican's in power, just like how there's tons of Republicans who do the same thing. I'm not blasting the guy for it. I totally understand how people think like that. He was like, no, they wouldn't lie to us. They wouldn't do that. And I was like, okay, but they're going to lie in thinking that it's the better thing to do. It's the right thing to do, and that they're going to try to justify it. And so I told him, I told him later on the week, not Sunday, but I told him later on the week, you're probably going to see another 1 or 2 banks go down. And even though they're saying no other banks are going to go down right now, just be prepared that there's probably going to be another bank, and that you guys should just be aware of the situation, but not actually have panic about it. And then the wife said, okay. My friend I was talking with him as well, the guy my age, they were like, oh, okay, thanks for the information. It wasn't some type of really serious conversation like I'm saying it now. That's because I'm just tired. And you can see Bitcoin's making a move up here as well. Let's see. Let's watch this move here on the 1 minute chart. I want to see this. But basically, well, let me turn that down a little bit. And thanks for subscribing, John. I appreciate it quite a bit. There we go. within like, I think it was like 6 hours or 5 hours, something like that, Signature Bank got taken down too. And I texted my friend, boom. And then my friend said, yeah, his dad couldn't believe it. So, don't trust the government, but don't trust the government. I hope that makes sense. Like, trust the government is trying to do the best thing, but understand the government is probably going to lie to you in order to do the right thing. Which has its own ethics and morals, I guess you could all say. But, that's not for me to do it. I'm not really much of an ethical man when it comes to this type of stuff. I would be honest, like try to keep my ethics, but understand it would cause harm, which also raises another ethical question. So, it wouldn't be like a pure, I wouldn't be short of blame or anything like that. I'd still cause problems by going through my way. But again, at least I can say I was honest, right? But again, that's the difference between politicians. Politicians are in it to be reelected. That's why I don't like necessarily politics all too much. You got to say what you need to say in order to trick people. And hey, Daily Bread, happy to see you back, my man. Is crypto going up because of the distrust in banks or because the rumors of rate hikes going down sooner? Rate hikes going down sooner, especially because it would happen across the world. Now, American banks are getting hit a lot harder than other banks out there, but it's mostly the fear that, or the joy, or the perception that maybe there's not going to be any rate hikes. I think that there was even, I think it was Goldman Sachs or somebody said there's going to be no more rate hikes at all because of this. That's what they're estimating. Like, here. Goldman analysts no longer expect Fed rate hike in March after SBV failure. March 12th, Goldman Sachs analysts on Sunday said they no longer expect the U.S. Federal Reserve to deliver a rate hike at its March 2022 meeting, with a considerable uncertainty about the path beyond March in light of recent stress in the banking sector. Goldman previously expected a 25 basis point rate hike in March. U.S. regulators on Sunday said the failed Silicon Valley Bank customers will have access to all the deposits starting Monday, and regulators set up a new facility to give banks access to emergency funds, right? So, yeah, so, I mean, you're going to have a whole bunch of theories like this, and the fact that those theories are being discussed is what is driving the market up quite a bit, if you ask me. Plus the fact that Bitcoin had like a bajillion shorts on it at the time, and a lot of this was just a big short squeeze because, of course, remember guys, we were breaking down off of stablecoins, breaking down. Then all of a sudden, good news comes out, squeeze, right? One thing though here, as far as this is concerned, the market didn't really go anywhere today. The crypto market did. The stock market did not. I'll make that clear. And then as far as your question talking about the rate hikes and stuff, I'm still of the camp that they should be doing 25. I still think they're probably going to do a 25. But my mind could be changed tomorrow if inflation data is very, very cool. But if inflation data is very hot tomorrow, oh boy, there's no choice. They are going to go 25. The market will go down heavily, and you might even see something to the effect of 1,000-point down day for the Dow Jones Industrial Average. As far as Bitcoin's concerned, I'm not entirely sure how far Bitcoin might go down, but it would be pretty dramatic as well, I would assume. Are there any of the banks that went down considered a credit union? What kind of bank are they? They are regional banks. If you want to see what type of banks they are, you can go over here to Finviz. Go over here to Screener. Over here under Sector, go to Financial. Under Industry, you want to go to Banks Not Diversified, go to Regional. And then from there, go to Country and select the United States of America. And these are going to be all the regional banks. There's about 323 of them in America. It looks like on that are publicly traded. And you can go from the highest market cap down to the lowest market cap. And you can see U.S. Bank Corp here, number one, $58 billion market cap. It went down 10% today. Now, if I go check it out, it's currently sitting at, it looks like around $36. A few weeks ago, back in February, it was at 49. About $50 down to 36. That's a huge loss. They look at the weekly chart, show you a little bit different. Boom, like falling off of a cliff here, okay? Now, you could also go to the other ones here. The one that concerned me a lot was the First Republic Bank. This is the one that's really been in the news. This is probably the next one to drop, if any more do drop. It was once back in February, $145, $145 down to 31, 145 down to 31, and at one point it was down all the way to $17. All right, so these are the banks that are most likely people are getting more concerned about. Schwab, like I said, all of you guys know Schwab, I would assume. Schwab, Schwab owns TD Ameritrade. They went down from $86 down to 50. At one point, they were down to 45. Pretty drastic stuff. This is a huge, this is a large institution. Schwab is over 108 billion. Now it's at $50. That means just a couple of weeks ago it was at like 175 billion, and now it's down to 108 billion. That's a lot of money flowing out of this sucker. Okay, a lot of money flowing out of this sucker at this point in time. Now, do I think Schwab's going to go out of business? No. Am I probably going to buy some Schwab over the next few weeks? Oh yeah, probably, honestly. But you got to play it safe. Now, one other thing here. You can go over here and look at a lot of them. Some of them you probably don't even know what they are. Some of you guys do, but like here's Key Corp. Okay, Key Corp. This is down 27% today. Has a 10 billion. You guys can always click on this. It'll show the chart. If you actually click on the name of the company right here, Key Corp, it should take you to the website of the company. So this is KeyBank. All right, KeyBank. I don't like KeyBank. I've heard really terrible things about their fee structure here, but this is back in the 90s when I heard about it from my mom who used to use it and says, oh no, they charge horrible fees. But KeyBank here was just at $20. Now it's at $11. It's lost almost 50% of its value. At one point, it was almost down about 55-60%. Okay. So this is KeyBank. You guys all know what KeyBank is. I assume it's a pretty decently sized bank here. But even this is having issues. And what most people are doing is not just pulling the money out of the bank and just putting it underneath the mattress. They're saying, hey, I'm going to take my money out of KeyBank or any of these other banks. I'm going to move it to JP Morgan. JP Morgan right now is the bank where it seems like people are feeling the safest at. JP Morgan Chase, right? They seem to be the safe bank according to where everybody's putting their money at this point, which is good, right? We want to see some safe stuff here. But play it safe, guys. Be smart. But you guys can check out any of these stocks you want to. Anything that looks kind of scary, like I don't know. What's the First Horizon Corporation? I don't know really much about this. This is only an $8 billion company, so I don't know too much about it. First Horizon, it's your money. Let's find a way. Log into your banking, small business, personal banking, commercial, and specialty wealth management, right? So they're a small bank here. But it looks like they probably have a good amount of customers, right? People find their banks, and they're usually okay with it. People usually find the bank that gives them the least amount of fees, and you can even see if you go down here. Member of the FDIC. FDIC, you go up a little bit more, you may even find the logo somewhere here, but I don't know if I can actually find it or not. No, I can't find the logo like this. There it is. FDIC member right there, okay? So, what the heck? Wait, I'm probably just zoomed in too much here, right? What the heck is wrong with the logos? LinkedIn? Who does logos like this? Vimeo? Oh my god. The hell? Okay, whatever. I would not invest in this bank after looking at those socials. They have no idea how modern marketing works. But yeah, so you can just see that there's a lot of chaos in this environment right now. Most people are going to be moving the money out of banks they perceive as being too small to maybe stand up for themselves in some type of really crazy environment. And they're going to move it over to a JP Morgan or maybe a, I don't know, just a larger bank out there in general. But, usually when people do this, they want to move it into a bank they perceive it to be too big to fail. So they're going to make sure that their money is safe. On the other hand here as well, you guys really don't have to worry if your bank were to go under if you have less than $250,000 in it, right? Because the FDIC covers up to $250,000, and because the government is doing all these crazy bailouts now, at least the bailouts are going to be good for you if you have over $250,000, because that means you don't have to worry about the FDIC rules here. So that'll be interesting. But we kind of have to keep an eye on all this, how it plays out, because one other thing I'll mention here is we just got over a huge stablecoin crisis as well. if CPI data comes in hot and we have another stablecoin attack, it'll be another large move here on the downward side for the crypto markets, which I'm hoping doesn't happen. I'm really hoping that inflation numbers are going to be okay. The word on the street seems to be they're going to be a little bit hot. But again, we just don't know yet. We don't know. Right. 8:30 a.m. is core CPI, consumer price index, CPI year over year. It seems like it's expected to be median forecast around 6%. Previous was 6.4. If we're at 6.1, 6.2, anything like that, it's not going to be pleasant here. But I guess I can say this as well. They've changed the way CPI is read. They've been taking stuff out of the CPI in order to artificially move the price down a little bit lower than where it should be. So like I mean, this isn't going to be exactly what I wanted to show you, but like you see some of this. Beginning with January 2023 data, BLS plans to adjust the weighting method for owner's equivalent rent in the CPI. So that means they're not putting rent into it as much, okay? This new method will use neighborhood level information on housing structure types to weight its OER's unit sample observations. BLS will continue to sample and weight housing units to be geographically representative, and some neighborhoods, detached houses are underrepresented in survey responses, so additional unit weight will be given to underrepresented detached houses in the ORE index sample. They're trying to do less apartments because you guys know apartments are freaking expensive. So they're trying to figure out a way to make the CPI appear lower than it is. So a person living in a house that's like renting a bedroom or something like that, they want to make sure that that's in there. And I kind of understand why they want to do it. Like, okay, that's kind of cool. The information would be in there. But frankly, I think more people are honestly living in apartments than they are living in like houses like that and stuff like that, especially in like cities and whatnot. Oh, shit, get a house in the city? Yeah, right. But, you know, starting in January 23rd, the BLS update weights annually for the consumer price index based on a single calendar year of data using consumer expenditure data from 2021. This reflects a change from prior practice of updating weights biannually using 2 years of exponential data. So instead of 2 years of data, they're moving it to one. So they're messing with the data to make it seem a lot different, which is going to be so interesting to see how this plays out. But they're being honest about it, but how many people honestly talk about this? Like, come on, guys. How many people... Think about it. You might see a mention every now and again with CNBC or Fox Business, but they're not really explaining how this is being adjusted, right? So, with the release of April 22 data in May 2022, the CPI program plans to replace the data collected by the BLS for the new vehicles index with transaction data from J.D. Power. This index will continue to include prices for cars and trucks, but will no longer include motorcycle prices. Two special relative series that are currently published, New Cars and New Trucks, will also now be based on J.D. Power data. J.D. Power... Let's see, I want to see if I can find this here. They do it? Okay, we don't have to really go too far into it. But yeah, so now, you know, they've lobbied themselves into a position where they can get a lot of money for giving them data. And if you can kind of manipulate that a little bit, you're going to be just fine. So, you know, maybe I'm going too tinfoil hat here, but I don't trust this because, you know, the government's usually pretty honest with what they're doing, but nobody ever talks about this. Like, I guarantee the number of people that actually look at this page of the U.S. Bureau of Labor Statistics, come on. How many of you guys really look at this in your free time? Not you, because you have lives, unlike me who does this for a living, right? But like, you know, Marketplace, they wrote an article. Something's different about the consumer price index this month. January's consumer price index report released Tuesday was a bit of a mixed bag. This is, again, this is January. Prices were up 6.4% since the same time last year, making January the 7th straight month of cooling inflation year over year, since the CPI peaked at 9.1% over the summer. But on a month-to-month basis, prices actually spiked 0.5%, fueled by the rising cost of food, housing, and gasoline. Another thing that changed between the December and January reports, the formula the Bureau of Labor Statistics uses to calculate the headline number. All right? And so you go over here, and then this brings us back to the page here, right? For more information on adjusted housing weights and structure types, you can read location, structure type, rent divergence with neighborhoods. And I know this is boring, guys, trust me, but I mean, they try to make you seem like there's a whole thing here. It's not. Housing rents are a large share of the household budget and make a large contribution to overall inflation. Rent inflation for different types of housing units sometimes diverge, even in the same neighborhoods. We estimate during 2013 to 2016, apartment rents outpaced rents for detached housing in the United States by 0.75 percentage points annually after controlling for location effects. These rent dynamics imply a segmented housing market. They also suggest that rent indexes need to be based on data structurally representative of the measurement objective. In particular, indexes based on professionally managed apartment complexes mismeasure the rents for housing generally. Even indexes based on careful geographic sampling, such as consumer price index's own equivalent rent components, may be biased by a user of unrepresentative mix of apartments and houses. All right? Now, there's a solid reason why they're doing this. That's not like all me on tinfoil hat. They're just trying to put more data out there and try to make it a little bit easier. On the other hand, this is an easy way to try to take away from how crazy the rent prices have been going in apartments, right? You go over here to let's not even Tacoma. Let's not even go to Seattle, because you guys know Seattle is just going to be expensive. Let's go to where I'm from. It's Tacoma, and and you go down to here in the city. So if I go to this first one here, which is Villaggio Apartment Homes, which is looks like it's right here downtown. All right. A 422 square foot studio to a 512 square foot studio with one bath, $1,200 minimum. And that $1,200, that $1,276, $1,300, that's going to get you 422 square feet. That's crazy. There's no other thing. That's crazy. Now, people can afford that. People pay for it. Don't get me wrong. But it's crazy when you think about it, okay? Now, it looks like 522 is the basic. 522, this is the first level here. Nobody wants to be on the first floor in Tacoma. That's just kind of the ghetto thing. Street smarts, don't be on the first floor if you don't have to be. But A216, that one's a little bit better here. As you can see, that's $1,300 here. Don't want to deal with it. One bedroom, $1,500. One bed, one bath, 664 square feet. Right? You can see what it looks like right here. Living, dining, deck, sleeping, bathroom, kitchen. Not a bad apartment, just tiny. This is not some type of big metropolitan city. Tacoma is not big. If I go over here to maps. And I just show you guys our main downtown. These are our skyscrapers. Downtown Main Street. These are our big buildings. There's a few, but it's not like we're like, downtown Seattle, we're the life of the area. I mean, this is a freaking parking garage, for heaven's sakes, okay? Go over here. There's my Chase Bank that I go to. This is the time and place to save. And somebody freaking threw a rock through the window. I mean, see, it's not some great, amazing place. I do love Tacoma. I grew up here, but I grew up here understanding this is a ghetto town. Okay, they call it Compton. You can see the hills. There's an old hotel that went out of business right there. I can show you guys it right there, and they turned it into condos. Right, old buildings, nice newer buildings here. You can see that's all garage. 3 floors of office, all garages. And then down here, I think there's some type of cheesecake factory or something, right? And you're paying like $1,500 to be close to this, and you're not even close to this. Actually, the $1,500, you're like up here in the hills. Go up here, and you can see the parking lot. There's a great sushi restaurant over here called Fujiya. But it's not like it's some glorious, luxurious place. If I go over here, how do I do this? I love Tacoma, by the way. What is this? Nobody really walks through these alleyways, to be frank. Keep going. Yeah, you go downtown areas. It's a city, but I wouldn't say it's someplace you really want to get out of here. I want to see past the bus, but okay, there we go. There's that dumb bus over there. You can see how this is one of the main streets. Oh, they put a new company here? Pokemon cards, video games, Lego. I think that actually closed down here. Yeah, because you see how there's nothing here, nothing here, nothing here. This looks kind of like Seattle in some parts, but like there's no businesses here. I think if I go back to the other street up one level. Yeah, that cool business that looked like it could have been cool for a time, it closed down. Sure, it's like the sad part of towns. You know what I mean? Because like nobody ever wants to see their town like this. You see how they got their windows boarded up over here. Not sure what this is. Mary Bridge Children Multi-Care. Oh, that's pretty cool. But it's you got your parking garages, your parking rides. That's the place for your thing. Your downtown city. It's not as good as it once was. The height of Tacoma really seemed to be around 2014 to maybe 2020 when COVID hit. There was like a nice little sweet spot. We were coming out of the recession, the financial crisis. Things were kind of picking up. Prices were kind of stabilized, but everything wasn't too expensive. There was a sweet spot in there. Then COVID came around and it like fucking killed everything. But I think probably some of you guys can kind of relate to maybe your own towns having where like you guys felt like everything was kind of going on the upright. Then COVID hit, and all of a sudden, coming out of COVID, everything just kind of went to shit. Never put money in a bank that's not FDIC insured. It's a must. Oh yeah. You definitely insurance like that, Mike. But most of the time, your bank is going to be FDIC insured. But you guys should see it. Like as soon as you walk in, you'll see a plaque and a sticker that says, "Hey, FDIC insured." You see me. And hey, Colby, FDIC had roughly $100 billion in reserves. SVB was about $600 billion in unaccountable deposits, and LOL, SVB cleaned out the FDIC reserves totally. Yeah, I mean, again, you can understand why the government's lying, but you should understand that the government is lying. That's why. Oh, I don't know if some of you guys heard. I played the Biden speech. He said none of this is going to be covered by the taxpayer. The taxpayer is going to be paying for this, guys. I mean, it sucks. But if we didn't do this, it would have spread out. But I don't know how. I don't know how the regulations need to be fixed in order for this to stop happening. Remember, guys, there's probably a case, or there should be a case being worked out right now in California to go after the banking CEO who sold, or the executives who sold off millions of dollars worth of assets before the company went bankrupt. Right? They all knew it was coming. Let's go over here. Do they still have Silicon Valley Bank over here? That's no, the signature. There we go. Okay, signatures. Silicon Valley. All right. Beck Daniel, Chief Financial Officer, sold off $575,000. The President and CEO sold off $3.6 million worth of assets here. I mean, they need to be held accountable. Then Draper over here sold off $300,000 worth of sales back in February. They do need to be held accountable. Maybe December, the Chief Draper and Beck, maybe they can't prove it that far back. But I would say, they at a certain point they must have gotten emails talking about this problem. And if they were making trading decisions based off of that inside information, I do believe they should be going to jail. Maybe I'm too cruel for that, but I mean, send them there. Don't send them to Club Fed jail. Send them to the jail, where the air conditioning is kind of broke every now and again. There's a possibility they might get shanked, where they're kind of be, crying, scared in their in their cell because they're afraid they might not wake up alive. I'm pretty blunt with this type of stuff, and I'm much more of a tough on crime person. Maybe I play too much Red Dead Redemption. That's probably what's been altering my opinions here. But what do you call? I'm not so much of a guy that likes to give criminals that do more like white collar crime. I don't think they should be treated any differently than everybody else. I don't. That's like crack cocaine versus just regular cocaine or powder cocaine, right? I think they need to be held to the same degree. See, and here's cool guy. Don't worry, if the FDIC goes broke, we're just gonna print more money. That may lead to more inflation, but who really cares about inflation nowadays, guys? Really, we're used to inflation. Let's just keep the inflation train on going on here. Turn into Compton. Oh no, yeah, right. If you go over here to Tacoma, let me back up here very fast. Loki wants to say, you're grinding into my arm, dude. I don't know what he stretches into my arm. He'll go like this, pat, and then like a freaking cat. Come here. Say hi. I need to trim your nails. Oh, do you want a treat? Here. Everybody say hi to Loki. He wants to say hi. Oh, okay, come here. Yep, come here. Up, come on. Okay, good boy. And off he goes. Because remember, I used to live right here when it came to Tacoma. So I used to... Okay, so my apartment was right over here. Like, you take a turn in there. right there. They had these nice condos, but basically I lived right here, okay? And I overlooked the water. It was absolutely beautiful. Nobody could freaking climb into my apartment, do anything. You know, there's a alarm gated stuff next to a public school, so there was always cops here because it was a school. That's why I kind of liked this area. But you go down here. Oh, it won't let me go down this way. But you got a nice view of the water, even though it's kind of cloudy this day. There's a nice little area here. I don't know if I can show these guys to you. These hedges aren't here anymore. It's a parking lot because some damn corporation bought that apartment building. That's what forced me out. I was like, I don't want to deal with you people. Here we go. Oh, this is a room inside there. Some of these rooms had the tiniest little things. I had a normal oven, like a modern oven, but this place had like what you would call a tiered apartment system, where like there's like a basic apartment, a premium apartment, if that makes sense. The premium apartments were good to go. They had granite. I'm a sucker for granite. What about this one? Is this going to be another apartment too? No, this is on the outside of it. Okay, well, it was Bayside Gardens. It was nice. They own both these buildings here. But where all the really bad stuff is in Tacoma right now, as far as homelessness, it's by this Safeway over here. I would need to look at the layers here, because I used to walk around this park all the time till it got kind of dangerous. It was a nice park though. It's called Wright Park. I went to the private school, Charles Wright Academy. The girls' school is over here. Oh, that's the tennis club. Boys, oh there, yeah, any Wright school. See, Wright school's right there. But this is a dormitory school. It's like $50,000 a year, ludicrously expensive. Where is it? Okay, yeah, by the technical college. Yeah, this road over here. Is it over here by Yakima? I don't know. So you got people like this camping over here. It's actually not as bad. I'm trying to think of like when they do this. Oh, it's not as bad. So there used to be people camping on this road. I don't know. These seem like the old photos, to be frank. But yeah, there's probably nowadays people camping on this road. Oh yeah, so you can see them. See, yeah, they're showing old photos for some reason. Okay, let me go back over here. Let's go back. You see all those tents right there? That's the Tacoma that it's turned into, which is kind of unfortunate. Because there's tents over here now too in front of people's yards. I mean, imagine having a nice house downtown. You walk outside and there's tents in front of your yard, and the city won't do anything because it's you know, they don't want to. All right, now they're trying to build something up there. Maybe I don't know. I haven't been driving down Tacoma over here in a while. Like literally, I'll take my mom over here for a doctor's appointment every now and again at the hospital, and that's when I get to see Tacoma. Because there's a lot of cool parts of Tacoma, but you don't walk Tacoma as much anymore. You drive Tacoma, if that makes sense. Oh, but see, look at they put stones there to stop the homeless. See, like yeah. See, that's what's going on. See, times are changing, but like people like the city's not really doing much, so they're trying to figure out different ways to help it along. If you go to the Walgreens by my house, they're blasting opera music 24/7 to make sure homeless people don't stay around. Blasting classical opera music, and it's working. So there's like a pushback to everything we've been seeing. I would say, like as far as the homelessness issues, because the government doesn't want to do anything, or the government is so corrupt. I would say it's just spending money on stuff that doesn't actually address or help the people that are like, you know, suffering on the sides of the street with their drug addictions and whatnot. Because look at it. Rocks. I'm guessing somebody did this by themselves, or the city was forced to do this. Because look at rocks are doing the job. Rocks. Sometimes when we go primal, we find the solution to our sort of issues, right? Yeah, you can see the rocks weren't here before. Now there's rocks. Wow. Yeah. Yeah, you can see the rock. Oh, see those tents right there. Now there's rocks. Look at the city change up a little bit. Got some fences over here as well. So they're trying, because over here, this is called city YSEPs. This is all poor housing. When the government gives you a house to live, this is all affordable housing. I know they look nice, but the government will like let you stay here for like $300 a month. It's pretty chill. I lived in houses like this back when I was growing up, except for like, of course, they weren't nice. They were like shithole with rats and shit running through them. But times have changed a lot. There's a lot more money that goes to these programs. But yeah, so I'm actually surprised. So, you know, it looks like every city is doing something a little bit different. These are nicer apartments over here. Yeah, because there's a hospital, a couple hospitals over here. All the nurses like to live in these areas because they're a little bit nicer amenities, I would say. Anything else here? No, no more homeless stuff. But yeah, I mean, stuff's changing for sure. And hey, Magic Man, when is a copy trading with Mike coming? Will you do it on BitGet? Can you look at the VTS stock again? I'm continuing a large buy-in for long term. Did I miss your answer? Oh, as far as copy trading is concerned, let me go to VTS here as well. You said VTS, right? Yeah. So as far so as far as VTS Energy, there's not much I can tell you here. I can look at the company, what they do very fast, and go through the data to help you out. As far as copy trading, I'm in the works for it. It should start in a few weeks at the latest. I'm probably going to be doing it with Fairdesk because Fairdesk is available in America. And so BitGet isn't available in America for a lot of people, so I think Fairdesk is probably going to be the best way to do it. And then what I'm going to do at first is I'm going to deposit probably $2,000 to $5,000 into an account so I can copy trade for you guys. And then from there, I'll set up my accounts, make sure everything looks fine, and I'll be doing 2 to 5x leverage plays, probably in the 3 to 4 range on average. And then I'll be doing a few day trades every now and again, usually at support levels and resistance levels. I'm not going to really trade in the middle of trends all too much, to be frank. And then I'll be doing the same thing, but on swing trades every now and again here as well. Every stop loss will be about 5% of the Bitcoin price action or Ethereum price action. So that means if I'm doing a 3x leverage play, that'd be a 15% loss. So I'm going to make a video teaching you guys how to make sure that you're not risking too much money. So like if you guys only have $100, I don't want you guys to be putting all $100 into one specific trade. I want you guys to be putting like $10 to $15 in it, kind of letting it grow as I trade for you guys on the most part, okay? But it looks like Fairdesk is going to be the one. I'm talking with them, and they've been the best at communicating with me, talking about their copy trading platform and how I can set everything up to help you guys out. But I think Fairdesk is probably going to be the winner here. And I'm in negotiation phase with Fairdesk right now because I'm like, okay, I can bring people to your exchange, but I said that I need them to do something for you. And so what I think I worked out for you guys is, well, once I get my link from them, I'm still in the negotiation phases. Let me see what I say here. I got an email. Meeting. Cooperation. Oh, okay. So I get you guys a VIP level 1 discount, which means your trading fees are drastically lowered. So you guys are going to be paying less fees, even if you guys decide to trade on your own. You guys aren't paying the high fees that they're not high fees, but you know that you guys are paying less fees than everybody else. And then you guys also get an extra 5% on top of your trading bonus. So if they have a trading bonus, and it's like a 5% trading bonus, and you guys use my code, you guys sign up with me, you guys get a 10% trading bonus, if that makes sense. So I'm working on that right now, but I'm still in this like weird negotiation phase where I'm trying to get you guys like something else if I can, but I'm not entirely sure. I don't negotiate with exchanges like this too often. But what they want me to do is just to let you guys know that I am copy trading with them, which is fine. I mean, I'm pretty open about all this type of stuff. And they say they want me to use them every now and again while I'm doing my stream. So maybe I won't use TradingView every single time. Maybe every now and again I'll do a live trade with you guys, and that live trade will be on Fairdesk like twice a week or something like that. Like, hey, I'm taking a bet right here, usually at these larger support and resistance levels, and then the copy trade will automatically go for you guys if you're copying trading me. But you guys may not copy. You may not copy me. Maybe you guys just want to use Fairdesk for to do your own strategy. Perfectly fine with me. Yeah. So kind of in this holding phase, but it seems like Fairdesk seems to be the best way for me to get you guys to copy trade, and it's in the United States, which is always a cool thing as well. And Monica, you'll like this. They're coming out with a token pretty soon, which I'm probably going to buy up quite a bit of. But they don't have a token yet, so they'll come out with one eventually, which is fine. But they might wait a while for it. I'm not entirely sure. Oh, but as far as VTS, I have no idea. You have to look at this through the financials and not much else here. Energy, oil and gas. Let's see. Looks new. Oil and gas, energy. Velocity of capital compounding. Um, see. Hey, Monica. I'll see about BitGet. They've been kind of ghosting people. BitGet's been ghosting me lately, so I got to figure it out. Probably because they know I'm probably going to do a deal with Fair Desk or something. Um, But BitGet, I'll let you know. But yeah, I haven't gotten a link yet, so don't sign up for Fairdesk until I let you guys know, because I want you guys to get the extra discount codes, and I want you guys to pay less fees than everybody else. There's no reason you guys should pay for more fees than you have to if I can get you this code here. So like normally, see normally if I do a deal like this, they pay me like a flat rate, like they maybe a $500, $800 to just talk about them or something like that. But instead of doing that, I'm trying to get you guys discounts. And they're not used to doing those types of discounts, so I'm trying to push them to do so, but it's taking a longer time for them to do that. So I'm sure it'll be done by this month, but I'm trying to think as well. Remember, I'm going to Vegas for like a full week in a couple weeks here, so I can probably get the process started and be ready maybe like a few days before I go to Las Vegas. Maybe make 1 or 2 trades to see how it works out, and then once I get back from Vegas, I believe on the 29th or so, maybe the 26th, it's I get back on the 30th. So the 31st is really when I'd be starting it. So I would probably start doing the trading somewhere. Probably honestly on the first here on a Saturday when I have like enough sleep, I can see what the crypto markets are doing. Probably everything would start on April 1st. I would say April 1st is usually where I'm going to be looking for there. But yeah, I'll give you guys a link when it comes up. Just wait for me to finish this negotiation process, because I'm trying to get you guys level V2 discount codes. But they're saying I can get a level 2 discount code when it comes to fees, but you guys will get level 1 discount code plus the 5% deposit bonus, which is cool. But like, if I can get you guys the V2 discount bonus, I'll try. But again, I don't know if I could be able to get it for you guys. I got you guys the V1, but if I can get you guys V2, I'll be happy to do so. It's focused on retail and capital stockholders through owning for. Oh yeah. Okay. As far as this, I think you're probably fine. As far as Vitesse Energy is concerned, you'll see that there is some issues here. It did drop down 9% today. I'm wondering if that has something to do with some of the banking that's behind them, or something similar to that. For me, if you are going to be buying this in the oil sector, I think this would be a good long-term hold, because it does have a lower market cap. But you can see how this thing did come down pretty hard today. A little bit of a double top right here, broke down below that, came back up to retest, and kept on coming down. I would try to spread it out over some dollar cost averages, to be frank. I expect oil prices to go up over the summer as people get out more, people are driving more, people, having a fun summer. But at the same time here, with this whole banking debacle here, I don't know if we're going to go into a recession earlier. People just stop spending money because they're so terrified of of the way the banking institutions are kind of falling like flies at this point in time. But I would say dollar cost averaging is probably still my best bet here. But you're probably not going to be doing like $20 a week, $50 a week, whatever you're trying to buy. I would do large amounts of orders for a period of like 3 months, and that way you get enough exposure. So every 2 weeks you toss $1,000. Every 2 weeks you toss a couple $100 in there, and maybe you could try to time it with any dividend that they may have, which in this case the dividend is 11%. Try to make sure that you're putting these in here before the next quarterly dividend. That way you're getting it. But I would still try to dollar cost average in this bit by bit if you could. If there's the deadline for the dividends is coming up, you could always just try to buy in there. But if you're holding it for the long term, you should be okay with it. But just understand it may get a little bit volatile here with oil prices and this banking shit going on, but I think you'll be fine overall on it, especially because the way they're diversified. I remember we looked at them before. The diversification method is pretty strong. So if one sector is having issues, they should be fine overall. Plus, they got some good exposure here. See, and hey, Courtney, I'm excited about it too. I can't wait to do it. I'm just hoping I can get some of these extra things for you guys as well. this year of earnings haven't been started. Do you think we hit bottom in Q3? I do think we hit a bottom in the end of Q2 or sometime in Q3. I think that's been my target here. I still need to reevaluate my strategy here as we look at what's been happening with these banks, though. I would say, yeah, I'm still kind of around Q3, end of Q2, Q3. But I don't know how these rate hikes are the rate hikes going to keep on going. Is inflation going to be going down so much because everybody's afraid of the banks? I have no idea. So I'd probably still say at this point in time, yeah, Q3, end of Q2 is really what I'm looking for here. And hey, Patrick, I put out one Rumble video. I've been trying to figure out how to use Rumble because Rumble is freaking me out. I don't understand. Like, if I go over here very fast, so Rumble, oops, not Rumble Cole, because I did put out one video. I did put out one. Stats and analytics account. I don't like this at all. I don't like the whole. Okay, my channels. Right, I put out a video, but when you put out a video, I was trying to like upload a video, select a file to upload, update this one. When you hit upload, it gives me a few options. I'm still not entirely sure what it's asking for because there's an option here where if I upload onto Rumble, it doesn't want me to upload the same video onto YouTube. So I've been trying to figure out more about it, but I posted one video and it just nothing happened with it. Like I don't even think I got a view. I don't even think I got a subscriber off of it. Let me go over here very fast. Let's cut this out of the way. Wait, did they think me bashing bureaucracies got me a little flag from COVID-19? Oh, really? Damn, they're taking this shit seriously. Damn. Okay, that's fine. I don't care. Title over here. There we go. Let's copy that in here. Rumble. There you go. Choose on my own. There we go. And I hit upload. Personal use. Rumble only, non-exclusive, similar to YouTube. Video management exclusive, excluding YouTube. So I don't know if it's Rumble only or personal use, non-monetizable, non-searchable, available to all your subscribers, non-exclusive, similar to YouTube. I think this is the one. You will receive all net earnings collected in relation to publication of your content on the Rumble player, less than agency fee of 40%. If you select this option, you shall be entitled to remove content from the Rumble player at any time and maintain rights. But then when I read the full returns... Okay, well, let me even read the terms. Maybe that's why I didn't do it. I wouldn't let me read the terms. Yeah, I wouldn't let me read the terms. So I just don't know. So I've been doing personal use. Maybe I should do Rumble only. I'm not entirely sure. But it's weird. It's very, very weird. I have not signed an exclusive agreement with any parties. No. Check if you agree with our terms of service up to July. Terms of service, but it's not the same terms. It's not the same terms as right here. Each one of these. Yeah, that's the problem I'm running with Rumble at this point. I have no idea how to find the information. I've asked a few friends, and they say they have no idea how to do it. I may test it out as far as Rumble here eventually, but I don't want to get, like, they could strike my own channel with my own video if I hit one of the wrong ones here. Let me just hit submit. Is this similar to YouTube? So maybe that's what it is. But yeah, it's confusing as hell, dude. It's very confusing. I don't know why they have it like this. I really don't know why they need to make it more complicated. YouTube is very simple. You just hit update and you're good to go. Life is simple. Rumble, they make it so weird. I don't know why. I got SPY puts tomorrow and I'm sweating bullets. What's your opinion? Stocks tomorrow? My opinion means jack shit because it all depends on what CPI data comes out. If CPI is hot, your puts are going to be printing a lot of money. If CPI is cold and we have a good lowering of the inflation, your puts are going to be pretty much worthless, honestly. So it's a huge gamble going into the week to figure out if the inflation's still too hot or if it's cooling off very nicely. You obviously want inflation to be very hot. That'll give you a really good return on your investment as far as those puts, but it's all about what happens with inflation tomorrow morning, and tomorrow morning you'll know for sure. So I'd be awake when the market opens up to get all the data. That way you can have a good amount of information based off of that to kind of exit, or maybe even put some calls in the market if you need to. Can I do analysis on WAD's play? I don't know what WAD's play is. WAD's play. BitTrue. First of all, it does not have a lot of liquidity, so I'd say be very, very careful about this, guys. I would never really tell you guys to trade this too much here. It looks like it's been coming down, but it looks like it just got listed back over here in November 2021 at the end of the bull market. Kind of been coming down since then, Frank. That's fine. It's at about a penny right now. Not much liquidity on the day-to-day action, which you guys can see these larger moves here. I would say at this point, if you wanted to be getting into this, it'd be much better to do dollar cost averaging. On the daily chart here, it's clearly getting rejected off of this 20-day moving average, coming back down below the 50. So this might actually come back down to maybe 0.0105, a little bit less. 15-minute chart. I know there's not really much I can show you guys here, is there? No, there's not. Yeah, 1 hour maybe. Yuck. Mm-hmm. 4 hour. Maybe on the 4 hour, you could probably see some more optimism here if you have a clear breakout at the 0.0136 level, but that that could be like 0.01, just a simple breakout here. You had a couple of death crosses, just trying to bounce off of that, especially off of the stuff we saw with Bitcoin. If you wanted a better price to be buying into, if we have like worse CPI data tomorrow, shady CPI data tomorrow, I might be kind of around here under a penny, maybe around 0.0084, between that and 0.0089. I would consider doing an opening position to see if it could actually rally up a little bit higher. But since it looks like this doesn't really have all too much liquidity here, it's probably a lower market cap play. I would say take your time and just do some smaller buy-ins here and do a buy-in 1, 2, 3, then see if you can get a rebound off of that. But it might take a few days of consolidating in this zone before actually trying to make that reversal here. Whoa. There you go. It's okay. The weekly chart, let me see. The weekly chart has me a little bit more concerned about this, I would say. But you can see we're getting rejected off of the 20-week moving average for the past 1, 2, 3, 4, 5, 6 weeks. Maybe things get better there, but if it does manage to close above this, I'd be much more enthusiastic for some type of run over the following weeks after that. We have the 50 all the way over here. Oh, yeah, it doesn't even have a 200 weekly moving average yet. Does it have a 200 daily moving average? So how's that one looking? A little bit here, a little bit of resistance. I would say try to buy on this order block down here, or if you can, just try to buy off the support level here and see if it bounces. But if it doesn't, don't hold on too long, because this will most likely take you back down here to 0.0073, then most likely back down here to 0.006, which would be about like a 50% loss. So it's moving pretty nicely now, but if it just gets back down to that next level of support, that's 25%, 26%. Take it easy, dollar cost averaging. You don't have to put a lot of money in there to make a good amount of money, okay? So that's one of the good things about those low market cap plays. And hey, Monica, I'll let you know as soon as I get the link. I will post. I'll do a post. I'll do a short. I'll do a members video, and I'll do a regular video for everybody as well, explaining what to do. The regular video, though, I'll take me a couple of days to create, because I want to teach you guys how to set everything up. If you guys just want to deposit money in there and just wait, cool, that's fine. But let me make sure that I understand how the settings work when it comes to the copy trade data. That way that you guys aren't being over leveraged, or you guys aren't putting more money than you want to. Like if you guys put $100,000 in a copy trade with me and I'm doing a couple thousand, it may actually put more than that in sometimes. So I want to make sure that you guys have the settings or the knowledge to know how to manage your own copy trading portfolios to follow me, because you guys may follow other people as well. Who knows? But I'll be doing some simple change of character trades, but usually off of main levels of resistance and support. So there may be 1 week where I only trade twice, but there may be other weeks where I'm trading like 5, 6 times. It all kind of depends, because I'll be trading Bitcoin and Ethereum, and those two only. Bitcoin and Ethereum. Maybe something else if I want to, but primarily Bitcoin and Ethereum, because they're nice and standard, and they're not going to really wreck you too much if they go down the other way, right? And if Patrick, projected CPI range, the median forecast right now is about 6%. Last month it was 6.4%. We're aiming for 6% right now. So if it's harder than that, we're probably going to be looking a little bit rough. But we have CPI and core CPI and CPI year over year. You know, there'll be a lot of information to break down tomorrow. I'll be looking for Rick Santelli to be breaking it down on CNBC. So I'll try to be live tomorrow morning as well. And no worries, Joe. Good luck, my man. And hey, Charles Blevins. Hey, Mike, I've been watching your lives for some time now. I love how you break things down and no BS. Question, do we need to be a patron to get that link for copy trading? No, it'll be free. It'll be free. It'll be 100% free for you guys. You don't have to worry about it. Let me just figure out how to get the link first. Like, I'm in the process of negotiating because as an influencer, I have leverage in these types of things. Like, if I go to Fairdesk or Binance or KuCoin, they all have affiliate programs and I can all do this. But because I can say, hey, I'm an influencer, I understand my channel's worth, I can say, hey, let me share this with my followers and those that want to let me trade for them. They can follow me over here. But in order for me to do that, I would like you guys to give them something for their time and money, you know, for moving it over to your thing. So what can you give me? And right now they're going to give you guys a bonus when you guys put your money in there. And I've negotiated a bonus and I've negotiated a discount in fees. So I don't exactly know. Let me see what these fee differences are. Let's see. It's like their VIP thing. I gotta figure out more about it. Oh, the higher the trading volume, the higher the VIP status, and the lower the fees. Discover our tiered VIP schedule for higher volume traders. Applies to spot, margin, and futures trading. So if you guys want to trade spot, margin, or futures trading, if you guys use my link whenever I get it, you guys will pay less fees than those who just sign up by themselves. But again, don't rush into it. So right here, yeah. So you guys will get a fee of 0.019, a taker fee of 0.038, and a copy trader fee of 0.019. It's a little bit better than the VIP 0 here. And then copy trader taker fee 0.057, whatever. And then, you know, you can go up to VIP 5 or something like this. This is a volume of $10 million. That includes the leverage you take on your trades. So I would say we'll probably all grow our VIP status on here over time, because if I do a $100 trade with a 5x leverage, that's $500, right? And so $500, it adds up really fast to get to up to what do you call it, $10 million or whatever. But you know, if I do a $1,000 bet at a 3x leverage, that's $3,000, right? So you know, you can play it out as much as you want to here, I would say. But you know, I'm gonna try to see if I can just get it more. I'm being kind of greedy on your behalf, but you guys know, or frugal on my behalf, on your behalf. I don't know, but yeah, I'll see what I can do for you guys. But I will put out some videos though. But I want to make sure I put out a video explaining how to do everything. That's the thing. How to set everything up. But yeah, thanks, Charles. I appreciate it a lot. Hey, and hey, Larry. Now with inflation being permanent, time to buy gold. Raising interest rates causes those banks' bonds to lower in value. Yes, it does, which will cause them to cash them in with the Fed. Yeah, this is probably the first time in a while my gold has actually been going up. You guys know I don't like gold as much over the past few months because it's been kind of doing nothing. It's doing something, which is very, very interesting out of everything here. Doesn't that put us in a worse spot using all this money? Hey, Ivan, yes, it's not a good scenario. No, nothing about this is good. Nothing about this is good particularly. But the perceived goodness down the road is what everybody's trying to figure out. Like, oh, if we don't have any more rate hikes, that goes back to, okay, maybe if we don't have any more rate hikes, that means the economy is going to start busting again, earnings will start going back up, and that's what everybody's hoping for. The problem is, if we're not going to be raising rates anymore because of this banking scare, inflation is going to stay around and it's going to get worse. And if inflation gets around and stays worse, that means that the bad move that's going to be coming along eventually, it's just prolonged. How long do you want to prolong it? Who knows? But inflation is going to be very, very bad during that time. And hey, Bideford, I could probably have multiple videos, or somebody stole an account of mine. I don't know. It's not the first time somebody's tried to steal one of my accounts, but I think I only have one Rumble account. I can check though. I can always check. But yeah, I don't think so though. I don't think so. And hey, Delos, no worries, man. Happy to help you out. Let's see. And thanks, guys. I'm happy with Fairdesk right now, just because they're available in America, and you guys know how hard it is for these exchanges to play within the rules. I'm happy that they're available in America right now, when a lot of other ones are maybe like, Binance is getting attacked by politicians left and right. Fairdesk isn't getting attacked by any politicians, so I'm just like, thank you, thank God. Do I actually use the super trend and smart money concepts to trade? And hey, Mr. Quinton, yes, I use it quite a lot nowadays. A lot of times I'm doing more of these smaller trades within it, so your simple breakdowns and stuff like that. But again, when you look at a change of character and stuff, remember, you're seeing a clear breakout occur. You're just seeing a trend change. It's explaining a technicality that you're seeing in the charts. It's not like it's just something that you guys couldn't see without the information there. It's just a visual representation to say, hey, look at this, right? Like for me, I explained this when I first started trading with you guys. A lot of times when you guys trade, you guys can clearly see the imaginary lines in the charts and stuff like that. The better you are at trading, the more imaginary lines you kind of just get a vibe for, if that makes sense. But yeah, I've been using this a lot to trade because I've been testing it out for a while. That's why I've been trying to come up with new theories and new ways that I could help you guys make some money, and get rid of a lot of the false signals that you guys may see. And when it comes to the super trend here, right? If you guys go over here to super trend, maybe I just go over here to super trend. Go over here. You go to any one of these indicators, they tell you what goes into it, right? Super trend is one of the most common ATR-based trailing stop indicators. It's a trailing stop indicator, right? But it has a couple little tools built on through the script to make things a little bit easier for the eye. And that's what I'm trying to help you guys out with. Instead of just teaching you guys how to use a trailing stop indicator, I say, hey, use this one. It's a lot better. It has the little buy and sell signals here. Has the fog, I don't know what you want to call it. The fog in here that's like green and red. Don't know what it's actually called. The indicator is easy to use and gives accurate reading about an ongoing trend. It is constructed with two parameters, namely the period and the multiplier. The default values used while constructing a super indicator are 10 for average true range or trading period for 3 for its multiplier. The average true range ATR plays an important role in super trend as the indicator uses ATR to calculate its value. The ATR indicator signals the degree of price volatility. The buy and sell signals are generated from the indicator when it starts plotting either on top of the closing price or below the closing price. A buy signal is generated when the super trend closes above the price, and a sell signal is generated when it closes below the closing price. It is also suggested that the trend is shifting from a descending mode to an ascending mode. Contrary to this, when a super trend closes above the price, it generates a sell signal as the color of the indicator changes into red, right? Can be used in equities, futures, or forex, or even in crypto markets, and also daily, weekly, and hourly charts as well. But generally, it fails in a sideways moving market. All right. I had a converted super trend indicator code from various platforms like Metastock in 2017, but in this TradingView version, a special credit goes to Alex Orkuchev, which gave me great inspiration to look at my indicators better with highlights, signals, and alarms. Thank you, Alex. And then you guys can go into the code if you really wanted to see it down here, and you can people ask questions, talking about stuff. But you adjust stuff. So I'm not using for this chart, I'm not using the basic super trend. I'm using the 50 to 5.1 instead of the standard 30-10 model. So, and what this does is, you heard him say it messes up in sideways trends. Well, you guys can see right here, if I get rid of the Lux algo here and leave this Lux algo, you'll see that we kind of have these sideways trends here where it says buy. You see that's a little bit better at pay a buy. It did make you some money if you're day trading. So right here, it didn't really make you too much money in day trading, right? Didn't really work out too well there. This one right here, buy. And so what you're doing instead is you're using this chart mixed with a 4-hour chart, mixed with a daily chart, mixed with a 15-minute chart, right? You're mixing them all up. But when I show you guys what I'm doing on here, remember guys, this is why I do the tutorial videos that are like much longer and boring. It's because I'll show you guys that you guys will probably have charts that look like, let me just find the video I posted for you guys. YouTube. I just posted it like a few days ago, so it's a newer one. Ultimate smart money day trading. Yeah, okay. So by the end of it, we'll start off with a blank chart like this, right? Not really much going on here. I'll teach you to make a new layout, name the layout. But by the end of it, you're looking like this, where you have a 15-minute chart on the bottom here, showing you the most of the information you need to see. You have a 4-hour chart on the top left-hand corner, and you have a 1-day chart right here on the top right-hand corner. So you can see all the moves that you're looking for, all the trends, whether you're seeing change of characters in the 4-hour, the daily, the 15-minute, right? The super trends on here as well. So you can kind of make a better informed decision instead of just looking at the 15-minute chart. I've been thinking that a lot of you guys, when it comes to 15-minute charts, you guys are day trading. You guys aren't necessarily looking at the 4-hour, the hourly, and the daily charts. So what ends up happening is you follow one of these signals, and you're following the signals in a time when you really shouldn't be. So the theory behind this last one here, this last process was, if you guys want to open up a long when it comes to, or a short when it comes to the smart money concepts indicator or the Lux Algo price action concepts indicator, both the Lux Algo, you'll see that within this trade right here, there's actually a sell signal right here, a buy signal, and you're looking at a more bullish trend here, right? Or more, actually, more sideways trend, right? Normally, what you're looking for is a larger breakout point with the buy signal happening. So you see a buy signal right there, up above, buy signal right here, up above. And then, how would I say this? On the 4-hour chart, which is down here as well, you'd want to have a buy signal as well and a change of character happening as well here as well, also, so you can have some more confidence that the trade is going on. So I might have to change the colors there, right? So this was at 9 a.m. This candle started off at 9 a.m., I would assume. So 9, yeah. So 9 a.m., Sunday the 23rd, that's when it turned green. So that means 9, that means like literally 13, so 13. So this might have actually been around 13 if we fill off the candle, so like 12:59-ish. Let's just call it 13 is when this started to turn green. So go back over here to the 15. And this buy indicator would be a little bit different. The buy indicator or the super trend indicator would be the standard one on the 4-hour chart. So that would actually, it'd be the same one actually. That's not too bad. ATR 310. Okay, that's actually not bad. Okay, so we go back over here to the 15-minute chart. No, I say 13 on Sunday. So after you head on the 4-hour chart, 13 on Sunday. 13 on Sunday. On this particular answer right here, if you didn't want to do this first trend, if you're looking at more like that, you could buy right here. Now, if you bought right here, you would have a bunch of levels of resistance to clear, don't get me wrong, but it worked out, and it worked out perfectly fine, right? But the theory behind the way I trade is a little bit different than I think the standard model that's promoted on YouTube with your general influencers out there or gurus or education, right? My goal in trading isn't necessarily to grab the bottom down here. I did a trade with you guys. I was like, hey, let's do a theoretical trade here and let's buy one in. I did that way of doing it. I told you guys I was buying at, what was it, 20,400 or so, I think it was. 20,400 was over. Oh, geez, I'm looking at 22,000. Was right over here, right? So your standard way of buying is something like this, and you see we kept on going down afterwards, but eventually it ended up working out because we were trying to stay above the 200 daily moving average, a whole different strategy. But if you guys want to use indicators and not have to really worry about it coming back down, right? Buy right here once you have all the green signals to say buy. You have change of characters on the 15-minute, change of characters on the 4-hour, the buy signal on the 4-hour, the buy signal on the 15 minutes, and then boom, you're looking good. So the way I think of new traders is I think of new traders usually having trouble maintaining their emotional stability when it comes to investing. And I would say that it's much easier for somebody to trade this type of move, perhaps, rather than trying to buy here at a support level, wait, watch it go down, be scared, maybe a little bit less scared over here. Then all of a sudden you're like, oh my God. You don't really have to have that big exhale moment or the extra fear in your trading style if you don't want to. Now, this was 20,900 or so. I got a worse buying opportunity on this one than this one, but this was less stressful and I still walked away with money. So do I really care? No, because I still made a profit. So it really depends on your strategy. And my strategies, as you guys know, are not like the normal YouTubers out there. I don't care about catching the bottom. I really don't. I don't. But if I can, like for instance here, you guys see how, let's go to full screen here. Let me actually zoom in here a little bit more. There you go, so you guys can see everything. So you guys see how we have this sell signal that starts off right here, right? Sell signal right here, coming down. We have like in the sideways trend right here. You see how we have all these like fall signals. Like this one says come down a little bit, came down a little bit, go up. You see how they're not really working out in your favor. This is why, in theory, you would have the 15-minute on the bottom, the 4-hour on the left-hand side, and the daily on the right-hand side. So when you come over here and you go over to the 4-hour chart and you're seeing what's happening during that time, you can say, hey, why is this happening? We're staying here for a little bit of time. We just got dumped upon. We have the sell signal. We're still in a bearish trend. So if you're looking to hold and do something for a longer period of time, you're going to be making much more money over here if you do the shorts than you are going to be doing if you go the long. So why fight the trend even if you have to scalp? It's better to scalp the downward trend. And on this example, I mean, you would say probably, well, we've kind of been stagnating for a while, and you guys could have shorted right here and made some money, but you can say, hey, you know, there's a little bit of a breakdown happening right here. I can probably do a short-term trade there, or there was a breakdown happening right here. I could have done a short-term 15-minute trade within that 4 hours. So let's go over here to 4 hours. Right, and so you see the change of character right here, right, within the sell zone, also within the sell zone of the 4-hour chart. And like, okay, you open the short, you're waiting a little bit of time, it works out. It's a short-term, it's a day trade, not some type of long multi-hour trade. And then boom, you're looking fine. And you can say, whoa, look at this. We hit that short-term support. It went down below it, but you're not trying to catch the top, not trying to catch the bottom. You're just trying to make a trade. And this trade would have been a levered trade, honestly, because you're day trading on Bitcoin. It's probably better to do it on Ethereum, to be frank. But again, you have an opportunity. That's like a 0.75% profit for holding for about, I don't know, about 2 hours or so. And so if you're doing like your standard 5 to 10x leverage play here, let's just say 5, that's about, I don't know, like 4% profit, something like that. That's not terrible. Now, most of the time you're going to be looking for these larger plays here, but you never know exactly when that big move is going to be coming down. You could probably also see this as well. 15-minute chart, you have a clear top neckline break, but this kind of happens so fast, I doubt many people would catch it. You'd probably have to catch it after the 15-minute candle closed, and then from there you're trading this move down here, and sure, that works out for you, don't get me wrong, but you're not going to be getting that beautiful first candle. You're going to be catching on to the end of the candle, if you will, which is fine, but again, you just got to be prepared for it. But you're going to be using the data you get from the 4-hour chart and the daily chart, but usually you're going to be doing the entering of the positions into the daily chart, right? Into the 15-minute chart, 15 over here. But I'm much more of a momentum trader than a buy low, sell high. That's why I'm much more of a guy that likes to trade breakouts. Remember, if you followed me for a while, you guys know I like breakouts. So if I pull up this page right here, popped up into here, recording fresh, patterns. When you trade a breakout, are you buying the bottom? No. If you trade a breakdown, are you catching the top for a short? No. It's so, like, if you think about it, it's like who I am as an investor. It's kind of like my personal style. But you'll see tons of investors out there, like the classic one we did. I think the biggest trade we ever did together was the Apple one that went up like 1,000% during the bull market when trading was a lot easier, of course. We go back over here. We look at the daily chart for Apple. And we didn't use all these indicators like we're doing now. This is just kind of help you guys out with your life, make your life a little bit easier. This one. I really don't remember which trade it was on. Auto 20. Two. No, okay, that's what we are. Okay. I'm pretty sure, like 99% sure it was this one, but I just want to make sure. Okay. So, we bought a simple options breakout here. And I think it's because of time decay. Since I trade options a lot more too, I think my mind automatically does a time decay bias when it comes to options. And that could be one of my faults here. I wouldn't say it's a fault since I'm making money, but it's something that you guys might want to be aware of, right? But you see a classic pattern right here, consolidated for quite a bit of time, finally had a breakout here. But did I buy down here? No, I didn't. In fact, if you kind of went off of this other trend line, we kind of had a breakdown right here, which was kind of funky. We had another breakdown right here, which is kind of funky. So again, it's not perfect, right? But I mean, who's going to be shorting into a bull market, right? That's a whole different thing right there. But perhaps within that chart, you guys might have seen that, hey, we had another breakout right here that was working out pretty well. Popped, came back to no support. A golden cross right here. No death crosses inbound, and boom, we're kind of off to the races. There's a whole bunch of different ways to look at this. I might even add the traditional Fibonacci extension level onto this one. There we go. And we got some resistance, no resistance, some resistance up here. Eventually stopped up here, and it almost went up this high. I don't even know if this is the right one, though. Maybe we should go down to style. A little space on to go. Resistance, resistance, none. Resistance right there, resistance right here, resistance up there. There we go. That's what we're looking for. And up here, resistance. Up here, a little bit of resistance just for a couple days before it tried to break up. And then it tried to hold on. But then again, resistance here, resistance there. A little bit more resistance around here. Some pivots, sure. And then by then, we're using different type of Fibonacci levels. Probably, yeah. And this, you can still see that level of resistance right here. I mean, even now, today, you can still see that resistance, although you're probably looking at different Fibonacci levels, to be frank. But yeah, I mean, it's all how you put everything together. Just don't look at the 15-minute chart if you're scalping. Look at the daily chart. Look at the 4-hour chart. Look at the 1-hour chart if you have to. Look at all the charts you want to. I will usually have a layout here that's like the Lux one I showed you guys earlier. This one's more of a tutorial for you guys for me to make videos. But, here, like this. I know it looks kind of tiny to you guys, and trust me, I know. But you could have a chart that looks just like this. With all the different things working on, and you can say, wow, look at this. The 5-minute chart, we're having a slight breakdown here with a sell signal. The minute chart right here, we're still in the sell signal with a change of character on the wrong side. The 15-minute chart here, we're still in the green signal here, which looks nice. We're currently just kind of going more sideways, I can tell by then. We have a change of character, though. The 30-minute chart looks like a lot like the 15, still holding up okay. I see an order block up here towards 25,000, same up here with the 15. Go over here to the 1-hour chart. Going really sideways, but we're kind of towards the top end of this range right now, and I'm kind of concerned that maybe we're not going to be able to break out above it. Let me just make sure. Again, 2-hour chart here, we're still kind of grinding up, breaking out of those, breaking kind of like little highs here every now and again. But overall, we're just kind of trickling, and we're kind of in a part where we're giving back some of those gains. But I can see over here on these last two, we're kind of in levels of resistance right now. That kind of concerns me. I go over here to the 4-hour chart, and I can see we've broken out. Get rid of some of these old lines here. Oh, geez, this is so tiny. Smart trail I want to add on to this one, reversal zones. There you go. All right, I can see we're also in a reversal zone right here, so this makes me a little more cautious about going long during this time. I go over here to the daily chart. Oh, wow, we're in a big resistance level right now. We've had a monster pump, but we have just broken out of this trend here, so that's kind of good news. So maybe we have an opportunity to have one more pump up here, and then your mental fortitude has to come and you're like, okay, I know all this data is here. This data would suggest I probably, personally for me, don't want to be trading all too much at this point in time. Just my personal trading style, don't want to be trading too much right now, unless I'm looking for some type of put. But then in the back of my head, I realize, oh, wow, I know that economic data for CPI comes out tomorrow. On Wednesday, we have PPI, and on Friday, we have consumer sentiment. All things that can really mess with all the technicals I'm seeing right now and cause them to have major whiplashes. So normally, I'm not the type of guy that would be trading this type of stuff. That's just not my strategy. Because I want the market to be moving the way I predict it to be, and I don't want unknowns messing with my trading strategy. So there are tons of people out there that will love to trade this type of stuff with CPI data coming up. It's not me. That's too much of a risk that I don't personally want to put on my shoulders as an investor. To me, I grew up with very bad anxiety, and I have severe ADHD. Now, I don't like having more stress put on me than necessary. Some people can handle the stress better than others. I'm a person that tries to have a very chill trading and style. And that chill trading style will hopefully keep my hair on my head a lot longer than all those other day traders and people that make like $50,000 in a day, lose $200,000 the next day, they make $200,000 the next day after that. Where they're trading with high amounts. I don't really want to deal with that type of stress because you can see them all the time. Maybe you guys even see them on TikTok or Twitter or YouTube, and you can see how they're like this on the trade. I never want to be like this when I'm trading. I am usually just watching an anime, sipping some water, sipping some Gatorade that my sister didn't want, some lime freaking cucumber that tastes disgusting, or I'm playing outside with Loki because I'm still kind of confident the trade is going to work out in my favor. I don't want to stress. I don't like to stress. I have bad anxiety. That's not really too bad nowadays, but I have to manage it correctly. But I have bad ADHD. Even with the medication I take, and I don't even take it as much right now. I'm not even taking it every day like I was a few weeks ago, because it was making me too zzz. Like you guys probably felt like I was stuttering a lot. That's ADHD medication kind of making me stutter a lot when I was trying to force me to slow down. My brain doesn't like to slow down like that. I can be more coherent and articulate even if I'm talking fast like I am now with ADHD, rather than trying to have the medication try to like pit stop me. Medication for me sometimes it's like trying to get out of ice with a non-good four-wheel drive car. I'm like skidding out of it. I know what I want to say. I can articulate in my mind, but getting it to you guys can be a little bit more difficult. But yeah, when you see everything like this, it can really change the perception of how you trade. But some of you guys may not even like this. Some of you guys may be wanting to trade only on the 1 minute chart, and you guys want to have like a 50x leverage play, which is totally fine. You guys want to be more aggressive, go for it. But then in that case, you still want to see where the overall trends are pointing your way. Like, if you want to be trading in this 4-hour candle right here, you want to be trading in this like nice little move over here on the daily, or the 2-hour, you want to be trading in that volatile time. You guys don't even want to be trading over the last 8 hours, because if you guys are trading with 50x leverage, you guys can make like $3,000 for the day and just like, okay, that was fun. Is anything else setting up for me? No, I guess I'll go out and play with my dog. I guess I'll do something else. You guys don't have to overtrade. You guys are just there to make money. If you guys make the money, walk away and wait for another opportunity for you to make money. Okay, now enough of the rants, but yeah. So, and I'm sick too. Sorry, guys. So you guys over time will figure out your own strategies. But my strategy is one of being as simple as I can and being as least stressed out as I can be. And that's from just my personal upbringing. I had a very stressful upbringing. Very, very poor. Very, very stressed out because I was poor, being amongst a whole bunch of rich kids in private school because I got a scholarship because I was smart. But smart doesn't make you money when you're a kid. Smart just gives you the opportunity to make money when you're older. Right? So, a whole bunch of stuff. But you guys will figure out your own strategies. I'm here to kind of help you figure out what strategies you guys want to use by giving you guys the opportunity to see which ones work for you. Like some of you guys, like I'm not going to say who, but one of you guys made $5,000 off of that trade the other day when the 4-hour, which I showed you guys right here, that's why it's in my mind. When the 4-hour switched, like over here, and you guys waited, you guys were kind of concerned because again we were going sideways. You guys understand that these signals, if you guys read the directions, they fail a little bit more when you're going sideways here. Same with the change of characters, right? Change of character right here worked out okay. Change of character right here didn't really work out. Change of character right here a little bit, but not too great. Right here, again, if you're doing leverage trades, it might work out. But if you guys are doing swing trades, that's a 3% gain right there. But you guys did go down about 1.5%, 1.8. Maybe that spooked you out. Depends on you guys' emotional range. But one of you guys made about $5,000 just doing this trade from here over here, just to around here. Didn't even play the top move up here. Didn't even expect the larger move up there. But you still made $5,000. Now, could you have made $10,000? Sure. I'm not going to say couldn't have. But the guy made money. That's all I really want you guys to learn how to do is make money. If you guys want to adjust your strategies and test certain stuff out, go for it. Right? But he started selling off because he said he saw the change of character here, and then in hindsight he was saying, well, maybe I should have kept on holding this position because I saw that the buy signal was still green here, but I was afraid we might come back down, and I was like, dude, that's perfectly fine. And my reasoning for telling him you do perfectly fine is, first of all, he made money. Second of all, the guy, he understood that there was a crazy amount of things going on yesterday with banks falling out of the sky, people freaking out about are they going to be insured. Like it was totally reasonable. Stablecoin still having an issue. There's totally different. Like there's totally legitimate reasons. But hindsight always makes you freak out a little bit more. But now I'm saying like, look at your account. Did that trade make you happy? Seeing that you made like it was like close to like $4,800, not $5,000, but get the point. Did that make you happy that you saw your account go that much by just using this strategy? It's like yes, it did. And I'm like, remember that. Don't remember about the potential $3,000 to $4,000 he missed out on if he would have held a little bit longer. So each of you guys have your different strategies. Some of you guys may not even thought of never even selling over here. Maybe some of you guys were like thinking more 4-hour chart, like, okay, we're gonna rip. We just broke above the 20 moving average here. Let's see if we can get up here to the 50, if not the 200. I'm all on this. Some of you guys getting way more in depth because right there again, we're just seeing a reversal breakout right here. A resistance breakout, pop. Where's that next level of support? Some of you guys may be looking at something more like this. it depends on all of you guys' strategy. Some of you guys maybe just looking for this one right here. You can see that was a level of support and resistance for us. Everybody has their own trading style. But no, your trading style is going to be your own, right? It's like when you taught in school how to take notes. I was taught to take notes in a way that I can read. Don't worry about if the teacher can read them. Just I have to be able to understand them because they're my notes after all. Hopefully that rant kind of helped you out a little bit there. Hey, Monica, it'll be a mix of long and short term strategies. I will say, obviously, I'm going to be doing more day trading, but the swing trades are going to be there as well. Like if you can see this right here, this is just an example here. Change of character right here, open up a short. You can see how it took a few days for it to work out, but yeah, that's like one trade. And that trade might not even been closed down here. That trade honestly would have been closed right here. So I wouldn't have even got the bottom, but you guys would have been walking away with some really nice money. And primarily because remember we were breaking down at the same time. So change of character, I probably would have opened the position closer to over here. So you might have only caught this part, but you guys would have been making money, right? Because you're still waiting to see if we're going to break down or not. That's the tidbit, right? So it's not you're not always going to expect it to be on the same day there. And plus we had the death cross here. That was good news as well, stuff like that. There you go. But yeah, there'll be long-term trading as well. But the long-term trades have to be at term levels of resistance and support. I'm not going to be doing some type of longer-term trade from like here to here. No, the longer-term trades are going to be like from here to here, or death cross from here to here. They're not going to be trying to get the very, very top. They're going to be trying to get closer to the top, the resistance levels up here on the bottoms, but they're not going to be in this middle zone here. So they're going to be a lot less frequent. I'll tell you that now. Yeah, a lot less frequent. But they will be more profitable, I would suspect, depending on how you guys want to, hold along with them. See, and hey, the trading regime, I appreciate it, my man. I can go on rants sometimes. I can definitely go on some rants. Do I have limit buys in Robinhood? I had a limit buy order on BRCC triggered today at 580 with a yearly support of 575. They have earnings reports on Wednesday. Was it okay to buy on a yearly support? Typically, yeah. If you're probably looking at a 52-week low, is probably what you're talking about. Usually, they'll have a reversal around that time. Just be careful with all the news. CPI data can really wreck things. But from a technical standpoint, that's usually a pretty solid point to be buying, especially if it likes to trade within a longer term range like that. Would I recommend using the super trend and smart money? I'll say I don't know because I haven't tested it out yet. I would test it out and see if it makes that much more of a difference. So in this circumstance here with the daily, I'm just pulling everything out from Bitcoin here. You guys can see that we had that sell signal over here. Bring them over here. This is the one I'm talking about, I think, too. Yeah, okay, yeah. I would say it looks like it works out okay, but sometimes the colors of the candles may end up adding a little bit of confusion for you. I would say if you can find a way to get used to it, I would say it works, but you're really just looking for that change of character there, and I think that's still going to be represented in that. I can't pronounce the word, so I'm sorry. I'm not even trying to butcher it. I always try to say Hicken, but I already have troubles with some of the letters I can't say. But I would say, yeah, it's worth trying it out. And it looked like from the daily and 4-hour chart that I used, it looked like it was fine. You might have more issues as you see the volatility in the 15 or 5-minute charts, though. So, super trend, I would say probably yes. But as far as the smart money, I'm not entirely sure. You have to do a little bit more back testing on that one. I could try to figure it out for you, though. It's less stressful when you hold your bags in DC on the dip. If your initial investment might be a loss, but when you reach your original big buy-in again, you're up on your investment. Holder I am. There you go. See? Hey, Charles. Everybody has their own personality. Exactly right there, right? Hi, Michael. What's a good entry point on the HDRM? I don't know. HDRM? Well, that's not in there. And then maybe Hex Crypto. Not really much here. I mean, this thing has already been ripping off. I wouldn't buy it right now. It's already at a level of resistance. If you want to buy it, you got to be careful at these levels. I would totally wait for this sucker to come back down to at least 5 cents or something like that. It's been having a big rip, like almost like the BGB, which me and Monica hold a lot of. I would say probably best to do day trading until you can find a nice level to buy it. This is way too high for me to really want to do a swing trade off of it. I don't even want to play it short because this thing could continue to pump. I don't know the market cap on it, but I would say this is pretty risky to be buying at this point in time. I agree. Weekly seems to be stressful. Hovering around 15-minute charts for a minimal percentage of gains, not for me. What do you call it? Exactly. That's why I think there's a sweet spot for some of the investors that I know. One of my friends, he trades using the 15-minute, the 4-hour, and the day, like I was just showing you guys. But he trades for about 8 to 12 hours, and he tries to get that 4 or 5%. But there's less of those opportunities when you trade Bitcoin and Ethereum. He trades Ethereum. But he just trades less, right? Trades less, makes more money, and is perfectly happy. So again, there's a whole bunch of strategies out there. That's why the one I was talking about, the 15-minute chart, he was hoping for that one because you see that the bounce off of the support level down here, the good news coming out on top of that, that's what was kind of fueling that one. But again, if you're trading this up here, like let's say right here to over here, this is about 11 hours. It's you're waiting, but you're getting 7% Bitcoin. Now, can you get more, 15%? Sure, but some people don't want to hold that long, and I'm usually one of them. But as long as you can walk with that money with leverage, usually it's good. Now, if you're doing the 15-minute day trading thing, like where you're trying to play this move right here upwards or this move right here upwards, you're gonna have to be using leverage. You are not going to be spot trading this. I mean, you could in theory, but that takes a lot of capital up front, which I would probably say is definitely not the thing you want to be really doing, right? Let's go with the super trend right here. We don't really need that one, do we? And let's go. Yeah, that's what we're fine right here with the super trend. Anything, I just started trading the other week and been trading on live account with a 0.1 lot size. Do you think I should go into funding accounts? What do you mean by going into funding accounts? I've been trading with the other week and been trading with live accounts with 0.1 lot size. Funding accounts. I mean, normally I'm one that likes to stick with what you're good at for now. If you want to go into lot accounts, I would say you probably would want to practice that a little bit more. I don't know too much about them, so I would always say try to practice into it, but I'm no expert, so I wouldn't, I take my answer with a grain of salt. Isn't it called hedging when you only pull out the gain of your investment? Prefer to keep some investment in to catch the extra run up? That's one of the ways to hedge. That's usually the more preferred way, I would say, with people that want to trade the trends like that. You take out your initial investment or you scale out. That way you've locked in a certain amount of gains and you're kind of letting it keep on going and going and going. That's usually the best way to go, is to scale out or just scale out a certain amount, but scale out that's the term. The other way to hedge is, this is not as ideal, but during volatile times like this, when you have news events, it's usually the way you want to play it, where you open a short and a long at the same time. But your long is a 15x leverage long with $1,000. Your short is a 5x short, or like a 10x short with $100, right? So you're trying to hedge it a little bit. I don't like to hedge like that. If I hedge, I'm usually doing options during earnings, which is already hard enough as it is. But yeah, I like the scale out method. Scale out method is usually pretty decent. Or DC, yeah, dollar cost average out. Yeah, exactly. Yep. That's right there. And that's called edging. Yeah, see, there's another one there. And hey, Byte Media. But okay, everybody, I'm going to call it a night right now. It's been a good hour and a half talking with you guys tonight. I got to go make some dinner here, and I got to go to a restaurant. Actually, I'm not even going to have time to go to the store to buy some duck and stuff. I'll just go tomorrow. I was supposed to end the stream at 8 o'clock and then go rush over there before it closed, but I totally got stuck talking with you guys. But I hope you guys enjoyed the rants, and I'll see you guys a little bit later. I will leave you guys with Loki saying hello. Loki, or saying goodbye, excuse me. I was saying hello, goodbye mix. Loki, up a doozy. Yeah, that's a good boy. Come here. Up. Yeah, that's a good boy. Sure. Loki says goodbye, and have a good night, everybody. Thanks for watching.